And we are in unit 21. Who can remind me? We last left each other talking about the loan estimate. And TRID has some policies in place for the lender. And one policy, it requires the lender to send the loan estimate within how many days of loan application. And you all can all show me how many days within loan application. I'm seeing some threes come up, and I would agree. Within 3 days of loan application, the lender is required to send the borrower the loan estimate. And hear me when I call it an estimate. It's not the final number. It's not the end. It is an estimate. We're only 3 days out of loan application. Closing is still, a couple weeks away, 3, 4, 6 weeks away or whatever. So we're still a little far out, but the point of the estimate is to get the borrower the numbers, the rough numbers, so they can look at these numbers and say, do I have questions? Am I good with this monthly payment for the next 30 years? The interest rate, et cetera, et cetera, et cetera. Any questions on the loan estimate? Last thing we talked about. Good morning. So now we're gonna that doesn't look right. Hang on. I'm gonna do good old fashioned close out and bring it back up. That's how I know it'll fix everything. Ta-da. Perfect. So now we've done the loan estimate within 3 days of loan application. So now let's fast forward to closing. We're still not at closing yet, but we're closer to closing and we're finalizing these numbers. The lender puts restrictions, sorry, TRID puts restrictions on the lender. That looks better. Can you guys see that okay? Head bobs? The lender puts restrictions on the lender. No, TRID puts restrictions on the lender throughout the loan process. So that's from start to finish. Now, if we fast forward closer to closing, the document, or specifically the documents that we're going to be looking at, are the closing disclosures. Because of TRID, we now have 2 CDs. We now have 2 closing disclosures. Good morning. There is a closing disclosure for the seller. One thing TRID did was separate the buyer's numbers from the seller's numbers. We're trying to protect the consumer. And I need you guys to understand and hear me now. And you'll hear me say this a few more times, but hear me now. When we talk about TRID and we talk about TRID protecting the consumer, understand the consumer in this transaction is the buyer. It's the borrower. TRID is not protecting the seller because the seller is not originating a new loan. So TRID in this transaction, 123 Main Street, the consumer protection is all about the buyer. And what TRID cares about, TRID doesn't want the seller to see the buyer's numbers. The seller shouldn't care. The seller shouldn't care what their interest rate is and their loan amount and the terms of their loan. All the seller should care about is, can they get the loan? That's all the seller cares about. Can they get the loan to get the money to buy my house? TRID doesn't protect the seller. Thus, the lender does not prepare the seller CD. The lender and the seller have nothing to do with each other. Is everybody hearing me? The closing attorney prepares the seller CDs. And there are no restrictions with the seller CD because they are not the consumer that we are protecting in this transaction. The only thing TRID cares about with the seller CD is that the seller doesn't see the buyer's numbers. They don't even care if the buyer sees the seller's numbers because they're not protecting the seller. We're protecting the buyer. Do I have questions on that? Do we have Thoughts on that? Did everybody hear me? Nothing to do with the seller. However, the attorney's got to, we still got to show the seller their number. So the attorney will do that. They'll prepare the seller CD. Listing agents, they will send you the CD, a seller CD, a couple days before closing. I'll talk more about that in just a minute, because we still, as brokers, as listing agents, still need to review the seller's numbers and make sure they're accurate. We get those numbers from the closing attorney. Where does TRID kick in? TRID kicks in with the borrower CD, the buyer's numbers. And this is who we're protecting. And this is where our TRID requirements come back into place. So just like TRID requires the lender to provide the borrower a loan estimate within 3 days of loan application, we also have restrictions on when we have to send, when the lender has to send the borrower their CD. And TRID requires today that the borrower receive their CD 3 business days prior to closing if it's personal delivery. Now, I got a lot going on this slide, so we're going to break this down. First off, let's talk about personal delivery. Personal delivery means the lender either physically hands it to the borrower. Once they hand it to them, now we can close in 3 days. More likely what's happening today, though, personal delivery, is the lender is sending the borrower their CD 3 days prior to settlement through their portal, through their account. Remember, we talked the other day that it's kind of like your doctor. If your doctor needs to send you a message, they're not going to email it to you because it's not secure. So what they're going to do is they're going to send you an email saying you have something in your account, please log on and look. Once that borrower logs on, they sign off on the CD. When they sign off on the CD, that 3-day clock, that 3-day count starts. Counting days has proven to be challenging in the past, and a lot of it is determining how you're counting days. So understand with TRID, it is 3 business days. TRID does not count Sundays, and they don't count national holidays. TRID does count Saturday. When we count, anytime we count days, day 1 is always the day after receipt. So what's today, Thursday? If you receive your CD today, day 1 is Friday, day 2 is Saturday, day 3 is Monday. If you receive borrower CD today, the earliest you can close is Monday. This TRID rule prevents us from closing any sooner once we receive that CD and have the 3 days. So what if closing was scheduled for Friday? What if closing's scheduled for tomorrow and you don't get the CD until today? Sorry, closing's delayed. This is a rule. There's nothing you and I can do about this. There's nothing the lender can do about this. There's nothing that the attorney can do about this. This is a TRID rule that requires this 3-day count. Mark my words. You will have a closing delayed because of this rule. Remember, we said we're always going to tell our buyers and sellers to have a plan B, because delays happen, and I don't have a crystal ball, and I can't tell you what's going to cause the delay, but this is another thing that could, if we don't have that within that 3 business days. TRID then goes on to say, if you can't do personal delivery, if you are going to email it or you're going to snail mail it, now we need to allow for 6 business days. Again, Sundays and national holidays don't count. Start counting the day after receipt. I have never had to wait 6 days in my career. I think most lenders are doing the personal delivery. So at least there's that. If you come across one, then we just need to plan ahead. We talked the other day about the importance of communicating with our buyers, especially through the contract to closing process, and making sure that our buyers understand that the lender is a priority. And it's things like this why we need to get our buyers communicating with the lender. I would recommend to you guys, like the week before settlement, you know it's coming, it's on your calendar. The week before the settlement, hey buyers, how you guys doing? Y'all ready for this weekend? By the by, I need you to be on the lookout for a very important email from your lender. And if you don't sign off on it in time, closing will be delayed. So keep an eye on your inbox, watch your, this is just another way that we can help keep these gears, keep these wheels or gears going to get us to settlement. So the borrower CD TRID requires a 3 business day count, where Sundays and national holidays. And like we said, anytime you're counting days, are you counting contract days, calendar days, business days? Doesn't matter. A day is a day is a day. And anytime you count days, always start day 1 is the day after receipt. Because this is coming out closer to closing, it's still not final yet. I mean, we're pretty dang close at this point, but it's not final yet. Once the buyer reviews it, once the lender reviews it, the closing attorney reviews it, the buyer's agent reviews it, more on that in a second. Once everybody reviews it, there's a really good chance that we might find some mistakes. This is why we're reviewing it. We're looking for these mistakes, these errors. Y'all, humans prepare these things. Humans make mistakes. Do you guys ever make a mistake? Any of you ever? Sometimes, occasionally, right? So humans prepare these things. Humans make mistakes. This is why we have so many sets of eyes on these things to make sure that they're accurate. This is why so many people touch it to make sure that they're accurate. So let's say you're the buyer's agent and you'll receive the CD. I will talk more about that in a second. The agents are not getting the CD from the lender. Only the borrower is getting the CD from the lender. But you're the buyer's agent. You got to get the CD at some point so you can review it on behalf of your buyer. You get the CD, you're reviewing it, and you find a mistake. You will find mistakes. Just happens. We have a duty to report that mistake to the closing attorney and the lender. We owe that to our buyer to make sure that their final numbers are correct. Remember that A in old car again? This is how we old car right here. We owe it to our buyer to make sure that their final numbers are correct. So what if you find a mistake? Pick up the phone, call the attorney and the lender, either one, and let them know something's missing. My calculations don't add up. The tax information is wrong. Let them know what's up so we can change it before settlement. When we find a mistake, the lender will issue a new CD. They're always going to update it and send a new one. We don't have to do a new 3-day count, a new 3-day business days prior to settlement, unless any of those changes would be an increase in an APR, the annual percentage rate, if a prepayment penalty is added, or if the basic loan product changes. So in other words, if the buyer changes from FHA to conventional, for example. These are the only things, the only changes that will require a new 3-day count. Any other change, we'll just issue a new CD and closing still, or settlement is still a schedule. If any of these happen, then we need a new 3-day count, because if we can see a common theme with these 3 changes, this affects the borrower's bottom line. This affects the borrower's numbers. So we need to allow them for 3 days to go back and revisit that, make sure they can answer any questions, et cetera, et cetera. If you guys will, turn with me to page 566. And on page 566, we have our sample closing disclosure. Now, last class, we looked at our sample loan estimate on 561. The CD on 566 is the same borrower, the same transaction. So we can literally compare the loan estimate we got within 3 days of loan application to the closing disclosure we're getting within 3 days of settlement. So you can see on page 566, once again, there's the borrower's contact information, the loan terms, the loan amount, interest rate, principal and interest. Now we know we have our projected payment. Now we know insurance. We know our estimated escrow. We were told on page 561 that the estimate said your projected payment is going to be $1,050. Now that we're here at closing, we're looking at $1,050.26. I don't know many people that are going to get overly excited about 26 cents a month. If this was a whole number, then we may have to, go back and ask some questions, right? Down there at the bottom, cash to close, $14,147. Go back to that loan estimate. Remember what the buyer was told on the loan estimate they had to bring to closing? 16,000. And now that we're at closing, they only have to bring 14,000. Isn't that good news to the buyer? Anytime those numbers come down, it's okay. The little red flags go up when those numbers go up. And that's where we said the other day, I do believe that a lot of lenders overestimate charges to allow everybody this wiggle room for things that, could come up. And then at the end of the day, you can look at your buyer and say, you don't have to bring 16,000 to closing. You only have to bring $14,147.26. Do you have a happy buyer? You just gave them some money to go buy paint or moving expenses or whatever it is they need to do, right? This is what we want. The whole point of TRID is that we're not letting the buyer show up. I know I told you 16,000, but now that we're here, I need you to bring 20,000. Can't you just come up with $4,000, right? We don't want to put the buyer in a situation where they're not prepared. And by giving this loan estimate, we're preparing the buyer. 567 in your book. This is our closing disclosure continued. You can see you got a breakdown of all the borrower's expenses and the seller's expenses. Now, for our purposes, they're on the same piece of paper. But remember, in the real world, there's going to be two CDs. And you're going to have buyer expenses on one piece of paper and seller's expenses on another. Does that make sense? This is just for us for an example. But you can kind of see, get an idea. There's your loan costs. There's other costs. 568. I really like that top piece of 568 as a borrower, because maybe I don't remember what my loan estimate said. How many weeks ago was that? And I don't remember these things. But now look, the borrower can do a side-by-side comparison. This is what you were told at the loan estimate. This is what you're told now here at the final. And then the big question is, did this change? Yes or no? It's pretty easy for a borrower to look at that and see. And if it did change, I'm sure their next question is, why? But now they have that opportunity to call the lender and say, why? Why did this change? Bottom of, or further down on 568, we got two columns. The column on the left is for the borrower. The column on the left is for the seller. Again, in the real world, they're going to be on two different pieces of paper, but they just simplified it here for us a little bit. Again, just a further breakdown of how we're getting to buyer on the left, down at the very bottom, cash to close from the borrower in the amount of $14,147.26. Over there on the seller, breaking down their numbers. At the very bottom on the right, cash to seller, $64,414.96. That's that bottom line figure. That's what we need to call our buyers and sellers once we get our hands on these CDs and say, this is what you got to bring to closing, or this is what you're going to get from closing. The rest of it, 569, 570 is just more of the CD, just to give you a sample of what the whole thing looks like. We are getting ready to figure out the buyer's debit. So we talked about this mini CD. 567 and 568 is the number piece of the CD, if you will, that you're going to review one day. We're not going to study the CD yet. We're just going to break down the figures. We're going to talk about the figures. When you guys come see me in post licensing, we're going to do a full-blown CD. for both buyers and sellers. We're going to calculate using pages 567 and 568 how much your buyer has to bring to closing and how much your seller is going to get. So there's gives you guys something to look forward to in post licensing. But it's so important that we're helping our buyers and sellers understand their bottom line, their bottom numbers. So let's bring this home. What's all this mean for us? Well, as you can imagine, we're going to be held responsible for the accuracy of the information that we should reasonably know. Let me ask you guys something. Shake your head, yes or no. Does that say I'm responsible for every single number on that CD? Am I responsible for all? No. I'm only responsible for those numbers that I should reasonably know. So what are some examples of some numbers that I should reasonably know? Well, shouldn't I reasonably know the sales price? Shouldn't I reasonably know the due diligence fee, earnest money deposit, whether or not somebody's being charged a home warranty, seller pay closing costs? Where's all that information come from? How do I know what the sales price is? Due diligence, earnest money. Good morning. How can I reasonably know that those numbers are right? Venture a guess? Yeah. Go back to your file and pull out your sales contract. Isn't that the legally binding document? Buyer agreed to pay seller X amount purchase price and due diligence and earnest money. So one way that we can accurately verify these CDs is to pull out the contract and make sure that the numbers on the contract match the numbers on the CD. Did we do any amendments? Did we renegotiate the purchase price? We need to make sure that that new purchase price is reflected in the CD. Other numbers that I should reasonably know. Go back to page 567. We're going to talk about a lot of these numbers in just a minute, by the way. But down there on page 567 near the bottom, category H is in Heather, other. There's things down there such as there's that home warranty. There's our commission. Should we reasonably know our commission? What do you think? Is that something you guys want to verify? Your commission? Yeah. Yeah, absolutely. Other things on there, guys, most due diligence vendors, your home inspector, your pest inspector, your surveyor, most of those people that your buyer hired during the due diligence process, depending on where you are in this state, sometimes the local market will dictate, but for the most part, specifically here in the Triad, most of the home inspectors that we work with, for example, will allow the buyer to pay for the home inspection as part of their closing costs. So they'll go out and perform the home inspection, but they don't make the buyer pay until we get to closing. Buyer's agents, you're going to receive that invoice. And you have a duty to send that invoice to the closing attorney so the closing attorney can get it on the CD so we can make sure the home inspector gets paid. Now, yes, there are plenty of home inspectors out there that'll say, if you pay for it in advance, I'll give you a discount, 10% off if you pay for it on the day of the home inspection. Many first-time home buyers may not have that kind of money because, you know, they're trying to buy a house. So this is a gift from the home inspector, for example, to let the buyer do this. Again, buyer's agents, you're going to receive all those invoices. The home inspector will send you the invoice, the surveyor, the pest inspector, the radon guy. They're all going to send you the invoice so we can send it to the closing attorney and the closing attorney can get it on the CD. Can I verify the accuracy of those invoices? Can I verify that the home inspection cost is right? Can I verify the accuracy of that? Those are the things that I should reasonably know because I have that in my file. I received that invoice. By the time I'm done with you guys today, we're going to know how to calculate, how to prorate taxes. We're going to know how to do something called interim interest. These are all things that we should reasonably know. What are some examples of things that I couldn't reasonably know? Some loan costs. I'm not privy to the conversation between the buyer and the lender. I don't know what the lender said they were going to charge for a loan origination fee, for the most part. Maybe sometimes I do, but for the most part, I don't know what the lender said they were going to charge for a loan origination fee. I don't know how many discount points they agreed to. What I do know is if I see it on the CD, I can't necessarily verify it, but I need to look out for little red flags. If I see that this lender is charging this borrower a 15% loan origination fee, I need to get on the phone with somebody. I can't verify it, but I need to make sure it looks, I'll call it quote unquote, normal. And if anything throws a little red flag up for you, we need to get on the phone with the attorney or the lender to get that verified. So I'm responsible for reviewing it. I'm responsible for the information that I should reasonably know. And that is information that I have in my possession. The other thing I can do is just straight line add. We can just pick up our calculators and make sure that the numbers in the columns add up. Add up the first column, borrower paid at closing. Add up the second column, borrower paid before closing. These are all things that we can just add just to make sure that it's right. Again, we're not doing a full-blown settlement statement in this class. We're going to take this 567 and 68 and break it down into this mini CD. But for post licensing, we're going to do a much deeper dive into this settlement statement. As I said, mistakes are common. You're going to find a mistake. I wish I could tell you if you find a mistake. But instead, what I'm telling you is when you find a mistake. We had a closing not too long ago and the home warranty got on there twice. I don't remember now who was paying it, buyer or seller, but somehow it got entered twice. It's just a mistake. It's a duplicate. It's okay. Call the closing attorney and say, uh-oh, home warranty got on there twice. We need to remove one. I mentioned commission earlier. Listing agents, because the CDs are separate, the seller has a CD and the buyer has a CD, who typically pays our commission? Typically pays our commission. Who pays us? Typically, the seller, which means our commission is only going to be on the seller CDs, which means listing agents, you want to make sure that mine and yours commission is correct. Buyer's agents, you may not see that. Buyer's agents, I recommend you pick up the phone and call somebody and make sure your commission is right. If you can't see it, y'all going to verify your money. I know. Treat your buyer's money like it were your commission. What if you found an error on your commission? You going to pick up the phone and call somebody? You better believe you are, faster than you can pick up the phone, right? I need you that same kind of mentality with the buyer's numbers. Does that make sense? I was the listing agent one time. I'm not making this up. I was a listing agent one time. I was reviewing my seller CD. You know what was missing? Totally missing, not even on there. Our commission. Totally not even on there. Buyer's agent name was Mike. I called the closing attorney, the paralegal. I said, yeah, Mike and I want to get paid. And she said, and I quote, whoopsie. Could you imagine? What if I hadn't caught that? I mean, my seller was the sweetest lady, and I'd like to think after settlement, she'd sit down and write us a check. Is there any guarantee there? I mean, you know, we're all about when it's a done deal, it's a done deal. And now I'm coming back going, oh, you owe me some money, right? The firm may have had to gone after her. I don't know. This could have turned into a thing. But luckily I found, does that make sense? We have this duty to review these things for accuracy. And when we find a mistake, we have a duty to report it. So the details under H, let's see, we're back on page 567, are all negotiable as part of the contract or agreed upon terms. You know, I would get bogged down with what's negotiable, what's not. Anything's negotiable. anything is negotiable. So yeah, are they negotiable items? Yeah. But typically speaking, you know, the parties are going to be responsible for their own things unless otherwise negotiated. What are their own things? That's what we're getting ready to talk about in just 1 second. So this process, I'm going to step out of pre-licensing world for a second. Let's talk real world just for 1 minute. We're getting closer to closing. Let's see, who do we want to be? We want to be the buyer's agent. So we're a week away from settlement and we're on the phone with our buyer. We're saying, by the by, I need you to look out for a very important email from the lender because I need you to sign off on this email within how many days prior to settlement? How many days? Yep, there's another 3. So 3 days prior to settlement. Your buyer says, great. The lender sends the buyer the CD directly. That is one place that you and I cannot get involved in that communication. TRID requires the CD to be sent straight from the lender to the buyer. The buyer signs off on it. Then the lender and the closing attorney get together and put the finishing touches on it. The closing attorney may have information that the lender doesn't. The lender has estimates. The closing attorney has the actual invoice from the home inspector, right? So the two got to get together and put the finishing touches on it and make sure that their numbers add up, that all their numbers jive. Once the lender and the closing attorney talk, that's when the closing attorney sends the CDs to the agents. They will send the seller CD to the listing agent. They will send the buyer CD to the buyer's agent. Once we receive those CDs from the closing attorney, that's when we got to sit down and review them. And guys, by this point, we're like the day before settlement in some cases. Buyer's agents. We are the ones that tells our buyers. Once we review the CD and we know, we believe that the accuracy, we've checked it, we've added, we've made sure it's good. We are the ones, buyer's agents, that are calling our buyers and saying, so excited about tomorrow. I need you to go to the bank and do a wire transfer or get me a cashier's check in the amount of $14,147.26 to the penny. We are the ones responsible for that. So when I say the lender's final CD, that's the lender's final CD that they send the borrower within 3 days. The final CD comes from the closing attorney. That 3 days is just the TRID law. The last few lenders I've worked with, I really like, because when they send this email to the borrower, usually says, there's a whole bunch of information in there, but a lot of times they'll CC me on it as well. And it starts all bold, all red, all caps. Do not go to the bank until you've talked to your agent. I'm like, oh, thank you, lender. Because a lot of times borrowers see the one from the lender's final, or the lender's final CD run to the bank, and then those numbers may change. So what we get at settlement is the final. Does that make sense? And that's all part of the process. But that's where you and I are coming in and making sure that our buyers are getting, and sellers, those numbers are accurate. I don't know if you just picked up on what I said. Buyer's going to have to get a wire transfer or a cashier's check. Closing money has to be readily available funds. We can't bring a personal check to settlement because then we got to wait, 3 to 5 banking days for that thing to clear. So we need readily available funds at settlement. The attorney may have a preference if they want to do a wire transfer or a cashier's check. So again, if you've never worked with this attorney before, just pick up the phone and call the paralegal and say, how do you want my buyers to bring their money tomorrow? And then we're sending them to the bank. That email from the lender that you and I are getting with the bold and the red, that's my second favorite email. You know, my first favorite email is we are on record. My second favorite email is Clear to close. That means we have final loan approval. It's like clear to land, right? We're landing this plane now, clear to close. That's what we're getting. That's when we know we are good to go. Questions or comments? Just a couple more things to say about RESPA. We're on page 577. There's lots of examples and things to look at in Unit 21, which I think is helpful. But we're on 577 now. And a few more things to say about RESPA. RESPA has a whole laundry list of things that they do to help to protect the consumer. And this is just some of them. One thing that they do is they require disclosure on controlled business arrangements. Disclosure. What does it mean to disclose? To tell somebody. An example of a controlled business arrangement. This idea of one-stop shopping is gaining in popularity. So you may have a real estate firm, a lender, and a closing attorney sharing the same building, all under the same roof. They call the agent, say, I want to buy a house. I can recommend the lender and the closing attorney that are under my roof that I share office space with. Can I make my buyer use that lender or that closing attorney? Nah, because I can't make anybody do anything, right? So I can recommend, I'm like, hey, I got an in-house lender. I got an in-house closing attorney. If you're going to use my in-house lender or my in-house closing attorney, there's a pretty good chance, because we share the same building, we have some kind of controlled business arrangement. Somebody's going to get something from this, right? We're going to somehow work together. If nothing else, we're going to share rent, right? So the fact that we're sharing, the fact that we have this business arrangement, and all we would need to do in that case is disclosure. Let the borrower sign off, knowing that we have, I may make something if you use this lender, depending on what our controlled business arrangement is. So disclosure, back to that. RESPA requires a borrower credit for a yield spread premium. Now you'll remember the lender's yield is their rate of return. That's all a yield is the rate of return. The higher the yield, the more sellable the product is on the secondary market. Once upon a time ago, pre-TRID, lenders could charge the borrower for this increased yield just as part of a closing cost, part as a loan cost. RESPA stepped in and said, yeah, no, that's not fair. If you're going to charge for a higher yield, you need to give them that credit back at closing. Why should the buyer be responsible for the lender having a more sellable product? So if they want a higher yield, they need to be the ones to pay for that. Makes sense, right? See how we're protecting the consumer? We're not sticking them with these fees. RESPA put escrow account restrictions on the lenders. We're going to talk more about the lender's escrow account. The lender's escrow account, each borrower has their own little escrow account. And when the lender collects the payment each month, a 12th of those taxes and a 12th of those insurance, that money goes into the borrower's escrow account. So when those bills come due, the lender has that money to pay on behalf of the borrower. How much the lender can charge up front to originate the escrow account, more on that, and how much they can collect each month is regulated by RESPA. RESPA says you can only collect a 12th of the annual taxes. You can only collect a 12th of the annual insurance bill. Those escrow account restrictions come from RESPA. And again, we'll talk about setting that up and how that looks at settlement in just a minute. Loan servicing disclosure requirements. Basically, when you see that a loan can be serviced or a loan has been serviced, all we're saying is whether or not it can be sold or not. So who's going to service the loan? Are you going to service it in-house? Are you going to sell it and let somebody else service it? If the loan is going to be sold, that has to be disclosed. It's got to be told to the borrower when they originate the loan, when they're applying for the loan, that this is a sellable loan. After the loan's originated, once it's sold, the one that bought it has got to notify the buyer. The one that sell it has to notify the buyer. So they should be getting 2 notifications from 2 different lenders when that loan is sold, letting you know that somebody else is servicing it. This last one, this is the one that hit close to home. It used to be nice for us before TRID. I could send my buyer, for example, I could say, I could have a home inspector call me and say, for every buyer you send to me, I'm going to give you an Amazon gift card. Or for every buyer you send to me, I'm going to put your name in the hat. And at the end of the year, we're going to do a drawing for a free, what you want, fill in the blank. It used to be good, y'all. We got stuff. Guess what? RESPA said, no more. They eliminated that. RESPA now says, and I'm going to break this down, so just hear me and then we'll break it down. Settlement service providers cannot give or receive referral fees or kickbacks for recommending services. Let me break that down. Settlement service providers. Who is a settlement service provider? Everybody that provides a service during the settlement. Are you guys here? Do I have you guys? Did you blip out on me? No? Okay. Well, you blipped out on me. So as long as I didn't blip out on you. Okay. All right. All right. But we're good? Cool. I've done that before where we've frozen and I didn't realize it. I just stand here and rattle on for, a couple slides and you guys aren't. So I try to be sensitive to that. Thank you. All right. So settlement service providers. Settlement service providers are all those that provide a service during the settlement process. Brokers are settlement service providers. Closing attorneys, lenders, home inspector, pest inspector, surveyor, radon guy. Remember all those gears? All those people on those gears are a settlement service provider. So settlement service providers cannot give or receive. So if the home inspector does try to give you an Amazon gift card, can you accept that? No. Give or receive any kind of referral fee or kickback for recommending another settlement service provider. If it's a settlement service provider and I'm recommending their services, the only thing that settlement service provider can do is say, thank you. Why is this a thing? Well, remember what I said, it used to be really good.
Cool, right?
Yeah.
Oh, do you have a question?
Funny. I thought it went away again.
I think I got an accidental on mute. Let's see.
Yeah, right.
Daddy, I said,
So if you get or receive, and you can't, but it used to be that we could. Now let's talk about why I can't do this anymore. Let's say there's a home inspector out there that offers a $25 Amazon gift card for every buyer you send them. Why am I sending my buyers to that home inspector? Because they're the best at what they do? Because they're an amazing home inspector? I don't know. Maybe they are, maybe they're not. Why am I sending my buyer to that home inspector? Because I want my $25 gift card. Why am I sending? Because it's about me. Is that protecting the consumer? Maybe they're the best home inspector, maybe they're not. I don't care. I just want my Amazon gift card. Does that make sense, you guys? So how do we make this fair? How do we keep this about the consumer? Referral fees and kickbacks. And this is only between settlement service providers. Can I give my buyer a closing gift after settlement? Can I get them a Lowe's gift card after settlement? Yes, because the buyer is not a settlement service provider. It's got to be somebody that provides a service during the settlement process, the contract to closing process. RESPA says, I can't give or receive $1 or a donut. Absolutely nothing at all. Now let's talk about what's happened, especially now that we're certainly past the pandemic. It used to happen a lot more. We're starting to see it more and more. But these settlement service providers like to bring us stuff to our offices. They like to bring a box of donuts with a stack of business cards. Why? Because they want me to pick up one of their business cards so I can recommend their services. RESPA allows that. RESPA allows somebody to walk in the door and say, hey guys, here's a box of donuts and a stack of business cards. I'm going to put these in the kitchen. You guys help yourselves and let me know if there's anything I can do. What RESPA doesn't allow is that person to walk in and say, I have a box of donuts. You, and you get a donut because you sent me money last month. If you want a donut not money, but business, you sent me business last month. If you want a donut next month, you got to send me business. Does that make sense? They can do something for the whole firm, the whole office, but they can't give any kind of monetary thank you for sending their services. And we're starting to see them come out more and more. By the way, if y'all like donuts, you're getting in the right business. You know how else to say thank you to a whole office full of people? Just throw them a couple donuts. Bring me a bagel every once in a while, right? I'm kind of donutted out. You will be too. It's exciting at first. I thought it was the best industry ever, you know, and now I'm donutted out. So let's look at a couple examples on this, make sure we're good. Let's see. What year did this go into effect? TRID came into effect 2015. I'm unable to buy lunch for my client. I can because my client isn't a settlement service provider. Maria, we're coming back to that. Hang on for that just for a second. That's something else that 6 is talking about. Okay. So a home inspector pays a real estate broker a $25 referral fee for each buyer the broker refers to the home inspector. Doesn't that sound nice? No more. Again, whose best interest do you have in this case? Maybe they really are the best home inspector out there. Maybe they're not. Who do you care about in this situation? I want my $25, right? Here's another one. This was for real. This was an actual thing. For each borrower referred by a real estate broker, a mortgage loan officer places a numbered drawing ticket into a box and gives the broker a stub. At a pre-designated point in time, a ticket is drawn and the broker with the winning ticket receives an all expenses paid cruise. Heck, yeah. Why is everybody I know going to this lender? Because I want to go on a cruise next year. No more, you guys. Isn't that fair for the consumer? Doesn't that keep it fair for the consumer? And that's where you and I give or receive. So somebody may hand you a gift card, in which case we have a duty to say, no, thank you. Questions on that? Comments? So, gee, Julie, what's the big deal? It's only a $25 gift card. Penalties for violating RESPA in general, any violation of RESPA. Anyone could be looking up to $10,000 per violation, 1 year in imprisonment. An injunction is a legal stop. If you have an injunction put on you, you're not working while this matter is being investigated. The injunction can come from the court. The injunction can come from the real estate commission. You could have to compensate the victims and treble damages plus court costs for both parties. What is treble damages? You take the monetary damages, monetary damages, and you times it by 3. Let's see. So a housing development gives you an incentive for bringing referrals. Is that not allowed either? The builder can give you an agent a bonus. So you may have like a bonus from the builder because the builder is the seller. The builder is not a settlement service provider. And that's the question we need to ask ourselves. The builder, they're the seller. So yeah, and especially as this market picks back up and that pendulum starts swinging back, we're going to see more, seller offering buyer's agent bonus of X amount with an acceptable offer by Friday at 5. Builder offering buyer's agent $500 bonus, right? But that builder, that seller, is not a settlement service provider. Questions do we have? All right, so before we take a break, let's talk about what we're going to start doing after break. And after break, we're going to start working on this mini CD. And what this slide is the various places in your book that reference this settlement statement, specifically the math for the settlement statement. So we're going to spend some time. 579 to 582 is the math concepts at the end of unit 21, or 579 to 588, I should say. That's the end of 21. You also got some proration scenarios back on page 62. What's going on back on page 62? I had you guys make a note to hang on to this and we'll get to it later. Guess what? Later's here. You guys may remember back in unit 3, we learned how to calculate annual taxes. We're going to revisit that. What a great review. But now we're going to learn how to take those annual taxes and prorate them. We're going to learn what proration is, and we're going to learn how we can share that expense. And then you also got in the back of your book, that math facts section. Section 5 relates to the CD, the settlement statement. So these are just for your reference as you guys are, learning these. Let's see. If it was one-stop shop where they build, finance, and sell, how does that affect? I'm not sure I understand, but what I do know is they would have to disclose that arrangement. So if you were going to do it all, is that what you're asking me? Are you going to help them buy and finance it? Then you would just have to disclose. And with that being said, I think a really good rule of thumb, you may have multiple hats, but I think a really good rule of thumb is one hat per transaction. So you know what lane it is that you're in. Does that make sense? Because if you're trying to act like the lender and the agent, you're now on you're in the middle of a 2-lane highway. So I think just a good rule of thumb in general is one hat per transaction. If you're going to wear multiple hats, you need to disclose. Disclose. So let's go ahead and take our break. When we come back, we're getting into our settlement statement. Grab your calculators if you don't have them. And let's take 10. Cameras are back. They do offer, now you got to pay for it, of course, but they have CE cruises. So you could go like a 5-day cruise. You got to take 8 hours and do CE, but I'm sure CE is not too bad when you're on a cruise ship. But then again, you got 8 hours of that cruise that you can't be having fun. You got to be doing CE. I don't know. It sounds like fun to me. I think I'm jonesing for a cruise. This makes me want to go more. All right. Let's go ahead and take attendance. And let's talk about where we're heading. I would like to offer you guys a test tip. I recommend when you are taking both of these exams, my exam and your state exam, I think you guys should always bookmark the math and save all the math for the very end. You guys remember from the midterm, you had one question per screen. You had to click next or back, right? When you click next, if you see that the answer choices are numbers, don't even waste time looking at it. Just go to the next, bookmark it, save the math for the very end. Everybody with me so far? I don't want you guys, I'm okay with you running out of time on math because there's only like 7 to 8, 9 math questions. The math alone can't fail you. But I don't want you guys spending so much time on the math that you run out of time on agency or contracts or the rest of the test. So step 1, always save the math for last. Of the math, this mini CD is the last thing you do. What I recommend when you're taking your exams, this mini CD is the very last question you answer. And the reason I say that is because this problem, one point, and it will take you the longest. I'd rather you run out of time on this one problem than a whole section. Does that make sense? So my recommendation, we're saving all the math for last, and of the math, we're doing the CD. As I just said, guys, this is going to be a bunch of work for just one problem. Now, I know some of you, I used to do this live, and I hear you guys go out in the hall on break and say, that's a lot of work. I'm not doing this for the test. I'm just going to put down B, and then I'll figure it out when I get my license. If that's what you're saying right now, fantastic. You got to learn it at some point. If you're going into sales, you got to learn it at some point. I suggest that you start now for your exams. If you choose to wait until after your license, your broker in charge looks at you and they may say, because you're struggling to get through this CD, you have no idea what's going on. And your broker in charge looks at you and says, did y'all not cover this in pre-licensing? Do not look at your BIC and say, no, we did not, because we're covering it in pre-licensing. We're getting that opportunity. But with that being said, this is still only one test question. Does everybody hear me? Are you guys frozen again? Are you guys here? You can hear me. Okay. Can you guys still see me? It's just you guys. Oh, you're back now. Everybody like speeds up to gets back. So you guys all just, it's weird. I don't know what's going on my end today, but you guys have my number. Text me if you lose me. All right. So everybody hear all that? We're gonna say this very end of the math, just one question. I'm telling you, it's a lot of work for just one question. But guys, it's of my opinion that this is probably the most important math that we do in this class. This is one of the maths that actually goes out into the real world. As we've talked about, this is the math, how we protect our buyers and sellers. This is the math of old car. So it's a lot, yes. And it's going to take you time. It's going to take you practice. So we're going to introduce you to some terms. We're going to introduce you to some concepts. We're going to do one of these together. Only one together. That's all I have time for. All we have time for. Don't worry though. I got plenty of practice for you guys. And we'll show you where you can access that. So let's talk about some common terms or concepts we're going to see with these settlement statements. First off, what are we dealing with these settlement statements? We're dealing with debits and credits. The buyer has debits and credits. The seller has debits and credits. Do I have any accountants on the call? A couple of you. Accountants tend to struggle with this a little bit because in accounting world, debits and credits mean something totally different. So we got to kind of unwire you just a little bit to get through this. For our purposes, a debit is just money going out. Money due at settlement. Credit then is money coming in. You have a credit coming in, you have a credit coming in on your behalf. When it comes to debits and credits, I encourage you guys to think of your own bank account. When you go out to the store this afternoon and you swipe your card at the register, how does that show up in your bank account? That shows up as a debit. That's money coming out of your account into the vendor, right? Let's say you get a bonus from work and you deposit that bonus into your account. How does that look on your bank account? That's a credit. That's money coming in. So that's all we're saying. Money going out, money coming in. One thing we've mentioned, and now we're here, we're going to introduce you to the idea of proration. Proration is just taking a shared expense and making it fair for both parties. What are some examples of things that we prorate? Well, as we've been saying, at closing, we're going to prorate this year's annual property taxes. Let's say you're buying my house today. 2024 property taxes are for the property. The county doesn't care about the people. The county charges the property. You buy my house today. Is it fair for either one of us to pay the full year's taxes? You didn't live here the first 4 months. I only lived here, 8 months out of the year. It's not fair for either one of us to pay the full year's taxes. So how do we make it fair? We prorate it. We share this expense between the two of us. Understand, the idea of settlement is to settle or finalize everything between the buyer and the seller. When that deed changes hands, the two should be done with each other. That's what we're trying to accomplish at settlement. Finalizing everything, putting the finishing touches on things. And by prorating taxes, we can do that. Other things that we may prorate, other than this year's taxes. If there are HOA dues, that's a shared expense. HOA dues may be monthly, they may be annual, they may be quarterly. It's all up to the HOA. The problem has to tell you if the HOA dues are monthly or annual because there is no standard. So the problem will have to tell you. So today's only May 2nd. You're buying my house today. Is it still fair for you to pay the whole month's HOA dues? You didn't live there on May 1st, did you? You didn't own the property on May 1st. You didn't buy the property until May 2nd. So even though it's only a day is a day is a day. We're going to make that fair. So this year's annual property taxes, HOA dues. Another thing we may see prorated between the buyer and the seller is rent. So if the buyer's buying with an existing tenant in place, we get to share that month's rent. So we'll talk about that. Just a couple examples of things that we can prorate. We know now how to solve for annual taxes. Go back to Unit 3, we can find annual taxes. And we may have to break our annual taxes down into monthly taxes. We have things that we got to take annual and broke down into monthly. How do we take an annual and break it down into monthly? Let's see everybody's mouths move. Explain it to me. How do we do this? Just take that annual and divide it by 12. What if I needed daily taxes or a daily amount? If we have an annual, how do I break that down to daily? Now we got to divide by, that's right, 365, or I got a new fancy number for you guys in pre-licensing world. So hang on to that for just a second. But yes, there are 300, except this year, there's 366 days, right? We're in a leap year. So the number of days that we have this year, we're going to take that annual amount, divide it by the number of days in the year to get a daily amount. We'll see this in just a second, but I want to prepare you for the question I'm getting to throw out for you guys. In pre-licensing world, put the real world aside. In pre-licensing world, for your exams, there's a really good chance you're going to use a 360-day year. And a 360-day year means that every single month has 30 days. 30 times 12 is 360. The problem's got to tell you how many days to use. So it'll have to specify, use a 360 or 365. If it doesn't specify, for your practice, your exams will tell you, I promise. If you come across a practice problem that doesn't specify, I would use 360. But your exams will specify 360 or 365. The 360-day year, every single month has 30 days. So how many days are in February? 30. How many days are in October? 30. We don't get Halloween in a 360-day year, right? Every single month has 30 days. So with that being said, here's a good refresher for us. You guys set your chats to private before you get started. Set your chats to private. And the first thing you're going to have to do is find this year's property taxes. Once you find this year's property taxes, the question is, using a 360-day year, what would the daily taxes be? So chat set to private and tell me in a private chat what the daily taxes are. About 30 more seconds and then we'll work it together. What do we do first when we see a math problem? Just read. Just read. Put your pencil down, sit on your hands if you have to, but just take a second and read the problem. Property is located in Davie County and is subject to ad valorem tax rate of 80 cents per $100 value. Property's assessed tax value is 172,500 using the 360-day year. Question wants to know what are the daily taxes of this home. So refresher from unit 3. First thing we have to do is find our annual taxes, and we do so by looking at the tax assessed value as it relates to the tax rate. So refresher from unit 3. You may want to go back and review this weekend, refresh yourself on solving for annual taxes. Is that spelled right? Please pretend like it is. So our annual taxes is part of our assessed value, and we're going to use that tax rate. So what I'm solving for first, to get to daily taxes, I first have to solve for annual taxes. So these math problems, you guys, if I may make another suggestion, once you think you got that answer, and I think we saw this back in unit 3, we saw for annual taxes, but the question wanted to know monthly. You guys remember that? It tripped up some of us. We got to make sure we know what we're solving for. We got to make sure we know those formulas. So in this case, to first get to annual taxes, to get to daily taxes, I first got to solve for annual taxes. Problem tells me the assessed value of the property, and then it tells me the tax rate goes in the bottom right. The tax rate is 80 cents per $100 of value. Who remembers what that fancy word per means? Per means not multiply, of means multiply. What's per mean? Divide. So how do we solve that tax rate? We take that 0.80 cents, that 0.80, divide by 100 to get our rate of 0.008. Is that right? 0.8. Yeah. And that's the number we can use to put in our T-bar. Do I have any questions on how we plugged in the T-bar? Why we put what we put? Up down line on the T-bar means multiply. So 172,500 times 0.008 gives me annual taxes of $1,380. So what are my annual taxes? $1,380. What's the last step I need to do? Now I need to divide that by 360. And I get 3.8333333. Let me talk about rounding with you guys for a second, because that's a common question I get, and I think that's a common concern you guys have. So let's take a pause and alleviate your concerns. They say, when it comes to rounding, if you go out at least 3 decimal places, while you're working the problem, go out at least 3. You could go the whole way out on your calculator, but at least 3. And don't do your final rounding until you get to the final number. If there's money, we need change. So if you're rounding and it's a money figure, we need at least cents. Does that make sense? I need at least 2 places. But to calculate, go out at least 3 if you don't go out the whole way. The fewer times you touch your calculator, the less room for human error you have. So if you get 3.833333, we're going to take this a step further and figure out the number of days in a minute. So you might be best at this point not to clear your calculator and then say times however many days to get the most accurate number. This is what I know about rounding. You're not going to miss a question by rounding alone. In other words, they're not going to give you answer choices that are so close that if you round different than I do, you're going to get it wrong. They're not going to give you, something like this, whatever. If you're a couple cents off, it's because of rounding, and you'll be able to look at the answer choices and say, this is just a few cents off. I'm close enough. Does that make sense? You may not be right on, but you're going to be a couple cents off and you're close enough. The answer choices aren't so close that you can miss by rounding alone, as long as you're not getting carried away with your rounding. Go out at least 3. Is everybody good on rounding? Questions on how I got the 3.83? Again, if you need to go back and review Unit 3 with taxes, this would be a good opportunity to do it, because some of these practice problems you guys are going to have now is going to be to solve, first find the annual taxes, and then prorate the annual taxes. So these are turning into multi-step problems. So Unit 3 to review how we found the taxes. As mentioned, things that are typically prorated. You're almost always going to see this year's taxes. What if the seller didn't pay 2023 taxes? They just didn't pay the 2023 taxes. Is that on the buyer at all? No, that's something that would be something that the seller would have to pay, any of their outstanding liens or their unpaid taxes. We're also going to prorate HOA dues. And as mentioned, we're also going to prorate rent. Another thing that we may prorate, and I may look at this on Tuesday, just depending on how we're doing on time, just to give us a nice prorating refresher. For an example, another thing that we might prorate is if the buyer assumes the seller's loan, now we got to prorate the interest for that month because we're sharing that month's interest. So we may talk a little bit more about that, just kind of an FYI. What questions do I have on prorating so far? We haven't really picked our calculator up yet. We're still but what questions do I have so far? Other verbiage you may see on your settlement statement problems, something called accrued or something called prepaid. If something is accrued, it means that it was unpaid at the time of settlement. So when we get to settlement, if something has not been paid, if taxes have not been paid yet, that would be an accrued item. Something that is prepaid, I'm getting there. Something that is prepaid means that it's already been paid by the time we get to settlement. So accrued is, and remember, it's all about the day of settlement. Let me ask you guys something. If we're going to closing today, you're buying my house today. Have taxes been paid yet? Another refresher from Unit 3. Today's what, May 2nd? Have taxes been paid yet? I see head shaking no. Remember your taxation timetable in Unit 3? Taxes aren't even due until September 1st. So if we're going to closing on May 2nd, there is no possible way that taxes have been paid yet because they're not even due yet. We haven't even gotten the bill yet, you guys. So you're buying my house today. How do we know what this year's taxes are? We don't. The best we can do is refer to last year's taxes. Use that number to settle it. So September 1st is an important day when it comes to prorating taxes. More on that in a second. When we're doing these settlement statements in North Carolina, we are typically going to consider the seller responsible for the day of closing when I'm prorating. So if we're prorating, if we're sharing this year's taxes, you're buying my house today, right? The question on the table is who's responsible for today's taxes? And the answer to that is it would be me. Because the seller, when we prorate, I cannot stress this. I cannot stress this enough. Only when we prorate do we automatically consider the seller responsible for the day of closing. Sellers have their own debits. They're going to be responsible for their own debits. Buyers have their own debits, and they're going to be responsible for their debits, including the day of closing. This slide only applies when we're prorating, when we're taking a shared expense. What are the things that we prorate? This year's taxes, HOA dues, and rent, and interest if we're assuming a loan. With that being said, this says typically. You may see a question that throws something at you, like the buyer's paying commission. I need you to always do what the problem tells you to do. That's why that says typically. Remember, you guys, literally everything is negotiable. So if the problem tells you that the buyer is paying commission, then who gets that charge? Who gets that debit? The buyer. Do what the problem tells you. Y'all stop arguing with the problem. Do what the problem tells you. If the problem doesn't say otherwise, when we're prorating, we're going to consider the seller responsible for the day of closing. I always remember it this way. You're buying my house today. We're on our way to the attorney's office. We're going to closing right now, settlement right now. When we woke up this morning, when our alarms went off this morning, who owned the property? I did. So I get to be responsible for today. If everything goes according to plan, when we wake up tomorrow, who owns the property? You do. So you get to start paying. You'll be responsible for anything after. Does that make sense? That's how I was remembering. When our alarms went off this morning, the seller still owned the property. They typically, but we're always going to do what the problem says. Other verbiage for you. The problem may say to the day of closing. If it says to prorate to the day of closing, that's a charge that's going to be on the buyer for that day of settlement. If it says through the day of closing, then that's going to be on the seller. So two, the buyer's responsible for the day of settlement. Through, the seller is responsible. What I'm trying to tell you guys is to always do what the problem says. You may see, specifically with practice questions, maybe on your state exam, again, they got to tell you on your exams, but typically with your practice questions, you may see a few that require you to use the actual days of the month. Never use a leap year unless it tells you to use a leap year. And this is important for this year because I know a lot of, well, we're in a leap year. I understand we're in a leap year. I'm not reworking all these problems just for this year, right? So don't worry about it being a leap year unless it specifically says. But if the problem tells you to use a calendar year or a 365-day year, then we're going to use the actual days of the month. They should tell you how many days. If they're going to tell you, you may want to, you guys know the knuckle trick? We can tell you how many days are in each month, or maybe you remember the little song, so many days has September, right? So I wouldn't get too much worried about how many days are in May. Just let the problem work for you. I think the majority of what you're going to see, though, is this idea of a 360-day year where every single month has 30 days. So 30 days in January, February, March. And if you take 30 times 12, you're going to get 360. So I think this is the majority of what you're going to see. Either way, though, always do what the problem tells you. Do we have a feel for a common problem topic here? The knuckle trick. So January, February, you can count on the knuckles. I'll let you guys look at that. So January is a knuckle, February is an indent, March, April, May, June, July, hit this knuckle twice, July, August, September, October, November, December. Every time you hit a knuckle, those days have 31. So you may, yeah. I hope that's not our takeaway for this class today. I hope we, if that's the biggest thing we learned today, we need to go back and review. But I wouldn't so much worry about. Okay, so let's talk about prorating. We're leading all up to it. We got a couple different scenarios, and if you will, you can reference page 587 with me. Summary of items to be prorated on page 587, and it gives you a nice little breakdown. When we get to settlement, items are either paid or unpaid. When we come across something that's unpaid prior to settlement, that would be an example of us going to closing today on March 2nd. On May 2nd. On May 2nd, have taxes been paid for this year? We've already decided. No, they haven't. There's no possible way. The bill hasn't even come out yet. They don't even know the tax rate for this year yet. So if we go to closing today, we're looking at an unpaid item. When I prorate, I like to take my proration and give myself a visual. I like to give myself a visual to see what it is that I'm prorating. So I draw pictures. So if we pretend this line is this year, this is what year is it? 2024. In 2024, in pre-licensing world, is from January 1st to December 30th. Why December 30th? Because every month has 30 days. You guys there? Here? Okay, good. You're good. Okay. We have our annual timeline. What divides the timeline is the day of settlement. We know the seller owns a property the front part of the year, the buyer owns a property the latter part of the year. I took this idea of proration and I gave myself a visual. I gave myself an image without even picking up a calculator. Why don't you guys tell me in a private chat? Let's make sure we're all here with me. I'd like to hear from everybody, please. In a private chat, just looking at the picture, who has the bigger responsibility for taxes this year? Who owes more for taxes this year? And you can abbreviate B or S. I know what you speak of. Who has the bigger responsibility? And I need to hear from everybody. Let's call this a check-in. I'm wondering if we're all here or not. Yeah, so it looks like we're pretty much on the same page here, right? So who owes more for this year's taxes? The buyer. Why? Because they have a bigger chunk of the timeline. Once we draw it out, once we see our visual, we start asking ourselves, thinking it through. One of the first questions I want you guys to ask yourselves, and you may want to jot this down. Who owes who? With a proration, somebody owes somebody some money. The parties to the contract are buyer and seller. So somehow we got to make this fair. We got to debit one party and credit the other. If taxes have been unpaid, and we're asking ourselves the question, who owes whom? Let's think about what we're saying here. Taxes are unpaid as of the day of settlement. They're going to come due later in the year. The buyer will be responsible for the whole year's taxes near the end of the year. Now, the buyer's not going to sit down and write a check. The lender's going to pay it on their behalf out of their escrow account. That's why I didn't say the buyer's going to pay the taxes. I said the buyer will be responsible for the taxes when that bill comes out, and their responsibility will be for the whole year. So if the buyer is responsible for the whole year, who owes who? Doesn't the seller owe the buyer some money? And specifically, what the seller owes the buyer for is the period of time that they own the property, including the day of closing. So who owes who? The seller owes the buyer for their portion of the taxes. So when these taxes come due at the end of the year and the buyer is responsible for paying them, they have already collected from the seller at settlement. Remember, at settlement, we are settling or finalizing everything between the parties. Could you imagine a world if we didn't do this? Again, you're buying my house today, and we don't prorate taxes. The tax bill comes due in September. You call me in November and you say, Julie, our taxes for the year are due. Send me money. What am I going to say? That was a good one. Have a nice day. Click. Why are we settling everything now? Because we got to make the parties whole. We've got to make it fair. So we have the the seller pay the buyer, and that shakes out to a debit the seller, credit the buyer. We have 30 days in January, 30 days in February, 30 days in March, 30 days in April, and 2 days in May. So we're looking at the seller paying the buyer for 122 days. Tell me in a private chat, if our daily taxes are $3.83, tell me in a private chat what the amount on the settlement statement will be. What is the amount that the seller owes the buyer? So I have daily taxes every single day this year. Taxes are $3.83. And what we are trying to settle is the buyer's portion, the seller's portion of the year, which is $122. So how much does the seller owe the buyer? $467.26. This way, this is that much less that the buyer has to bring to closing. And when the tax bill comes due at the end of the year, the buyer is whole. They've already collected the seller's portion from the seller as settlement. What questions do I have? And by the way, that's going to be that $467.26. That's known as a double entry. A double entry meaning it's going to show up how many times on our CDs? It's going to show up twice. It's going to show up once as a debit to the seller. It's going to show up again as a credit to the buyer. Money that the seller owes, money that the buyer has coming in. So let me go back. I got a couple questions coming in. So let's see what we got here. As a buyer, if I buy a house with a lien, I assume that automatically, or is it negotiable? Oh, goodness, no. That's why as a buyer, you have a closing attorney so they can clear all those liens before that deed is in your name. Well, I want you to start on a clean slate. You're not assuming the seller's debt. You'd never buy a house, right? So we're going to clear all that out. no liens, and then we're gonna start fresh with you. 150 days of taxes, seller to buyer will be responsible. That must have been a previous. I apologize. I might have missed that. If I did, let me know. So how does the tax percent decided or based? If it's not out yet, all we can rely on is 2023 taxes. I don't know what 2024 taxes are yet, but I know 2023 taxes. Could they go up? Could the buyer end up, but they're not going to go up daily, like enormously. You know what I'm saying? It's not going to be like, this is the best we can do though. Our only other option would be not to allow closings until September 1st. It'd be hard for any of us to make money, right? Our taxes calculated the same on a new build, new construction. Eventually, the structure's got to be taxed, but generally speaking, when you buy new construction, you might just be being taxed on the land. But once they build, once it's complete, yes, they will tax the structure. So one scenario, I got two different scenarios if taxes are unpaid. This is just one. And then we got to talk about what happens if taxes are paid. So one scenario, if taxes are unpaid, the seller owes the buyer. And in this scenario, settlement happened before September 1st. Do you guys have that date written down in your notebook real big yet? Circle it. September 1st, when it comes to prorating taxes, is a very important date. So what if closing happens after September 1st and taxes are unpaid? Closing is after September 1st, taxes are unpaid, which means we're going to do a double debit. With a double debit, how many people are going to be charged? 2. So now we have closing after September 1st. We still, I always, as long as I've been prorating to this day when I do it, I always take a second and draw it out so I can see what it is that I'm prorating. So now we're going to go to closing. Let's go later in the year. Let's go November, sure, 22nd. Seller owns a property the front part of the year. Buyer owns a property the latter part of the year. Taxes are unpaid prior to settlement. Because the bill has come out, because we know the tax amount and they're unpaid, by doing a double debit. So in other words, we would be looking at a debit to the seller and a debit to the buyer. By doing this, we know the amount and we know that the tax bill is due by the end of the year. So when the attorney does a double debit, they're going to collect from the seller's portion, they're going to collect from the buyer's portion, and they're going to take both of those and send one check into the county. They're going to pay the taxes this year themselves on behalf of the buyer and the seller. Does the county care where the money comes from? No, they just want the money. So with a double debit, the attorney is collecting each party's fair share and they are paying them on their behalf. So the seller's fair share would be from January 1st to November 22nd. The buyer's is going to start the day after settlement, 11/23 through 12/30. Figure up the days, calculate it by the daily taxes. You have your debit the seller, debit the buyer. When you guys are calculating forward on the timeline, in this example, when you're calculating the buyer's days, counting these days can get tricky. And I have a tried and true method to make sure you guys get the buyer's number of days right every single time. You ready for me to blow your minds? The tried and true method I have is count it out on your fingers. when we're calculating forward, I want you guys to count with me for the buyer's number of days. For November, they owe the 23rd, 24th, 25th, 26th, 27, 28, 29, and 30. There's 8 days left in November, plus 30 days in December, which means the buyer's responsibility would be 38 days. It is really, really easy, especially in the stress heat of the test, to look at this and say, there's only 7 days left in November. And what you didn't do was account for the 23rd. So how can I make sure you account for the 23rd every single time? Count it out. The buyer owes for November 23rd, 24th, 25th, 26th, 27th, 28th, 29th, 38 days plus, in this case, 30 days in December. Double debit. Questions? When do I do debit the seller, credit the buyer versus the double debit when taxes are unpaid? The answer is, it depends on the date of settlement. Before September 1st, debit the seller, credit the buyer. After September 1st, double debit. Questions? So these are problems dealing with prorations. And by the way, HOA dues work the same way. HOA dues are either paid or unpaid going into settlement. You don't have to worry about a double debit for HOA dues. So HOA dues are either paid or unpaid. Somebody owes somebody some money. What if we're going to closing? What's our date? November 23rd. What if we're going to closing on November 23rd and we are told that taxes have already been paid? First off, if taxes have been prepaid, I don't know the date yet, but I know it's after September 1st. If they're after September 1st, it's got to tell you if it's prepaid or unpaid. So after September 1st, it's telling you that it's been prepaid, which means the seller has already paid taxes before settlement. So again, I see the word prorate, I draw a picture. I know I'm dealing with my annual timeline. Let's go to closing on November 23rd again. Seller owns the property the front part of the year. Nope, seller. Buyer owns the property the latter part of the year. We've drawn it out. Problem says prepaid before settlement. We've drawn it out. And now the question is, who owes who? Now what we're saying is that the seller has already paid taxes for the entire year. The year has been paid. Who owes who? Put yourself in the seller's shoes. You've paid the taxes for the year, but you haven't lived here all year. Don't you want to collect some money from somebody? Who's the only person you can collect money from? The buyer. So we're going to do a debit the buyer, credit the seller. Now the buyer owes for their portion of the taxes, which is going to be the day after settlement because the seller's responsible for the day. So the buyer's responsibility is the day after settlement to the end of the year. Let's use our taxes of $3.83 again. I think I switched that date up, so you might want to count. Tell me in a private chat, what would the buyer owe the seller if taxes were $3.83 for the year? What does the buyer owe the seller? Yep, I changed the date up on you. Keep you on your toes. Seller pays November 23rd. Seller's responsible for the day of closing when we prorate. Buyer starts paying the next day. Man. I will after class. So let's see, we've already determined the buyer owes the seller. How do we know that? Because they're prepaid, which means they've already been paid. So now the buyer owes the seller for their portion of the year. What's their portion of the year? It's going to start the day after settlement. When we prorate, the seller's considered responsible for the day of closing. So the seller pays taxes on the day of closing. The buyer's responsibility starts tomorrow. How many days does the buyer owe in November? Do not look at that and see 6. If you did, you just missed the whole dang problem. Not because you don't know what you're doing, but because you didn't count right. What's one way I can assure us to count right? Pull these bad boys out. They can't take them away from you on your test, right? So we're going to count. The buyer's responsibility for November is the 24th, 25th, 26th, 27th, 28th, 29th, and 30th. There's 7 days left in November, 30 days in December, for 37 days. We know daily taxes are $3.83. So how much does the buyer owe the seller? To make the seller whole, $141.71. Draw the timeline and then ask yourself, who owes who? That's what we're doing with prorating. As the seller, do you now feel whole? As the seller, you now feel like you didn't pay somebody else's tax bill, right? And that's what we did with prorating. We made it fair. The buyer's going to give the seller some extra money at settlement to settle or finalize this idea of annual property taxes. Questions? Let's take 10. back. How are we doing so far? So far, so good. Remember, I'm recording you guys. This may be one of those classes that you want to go back through at your own pace. This is why we have the YouTube channel. So I'm going to take attendance. And, oh, Debbie, you're in. I just got you. Oh, and then she put her headphones. Okay. She didn't hear me when I said that. All right. Proration. Visit that. We'll see. We'll do a problem again in just a second. We'll work one. Turn with me, if you will, on page 588. I can't stress again the importance of 587 and 588 to helping you guys work your way through these problems, knowing what's typically a debit to one party and credit to the other unless you're told otherwise. So we're going to look at these pages and kind of break this down a little bit. Let's start with the sellers, because the sellers' debits aren't as big as the buyers. The sellers have less debits than the buyers. Things that we consider debit to the seller. I always say, if you can remember your alphabet, you can remember commission, the deed preparation fee, and excise tax. These are things that are going to be debit to the seller, and I'm on page 588, unless you're told otherwise. If the problem tells you that the buyer is going to pay commission, then I need you to do what the problem tells you to do. Is everybody with me? This is why we say 587 and 588 are typically, unless you're told otherwise. Please don't argue with the problem. In addition to CDE, the seller is also going to have their expenses, outstanding liens, unpaid taxes, things that are specific to them. As we said, if the seller never paid 2023 taxes, the 2023 tax bill will show up as a debit to the seller. If they have an outstanding mortgage, that'll show up as a debit to the seller. If they have an outstanding judgment or lien, that'll show up to the seller. So outside of CDE, other debits are going to be things that are specific just to the seller. The other thing that'll be debited from the seller at closing is the due diligence fee. Let's back up. Go back in time. Remember when we went under contract, the buyer handed the seller a check. You guys remember that? We went under contract. The buyer handed the seller a check. Fast forward to closing. I need to reverse that. The seller's already received that money once. We can't let them get it again. By reversing it at closing, it kind of cancels out what we did at a contract formation. So the due diligence fee will be a debit to the seller. The seller, the biggest credit is going to be the sales price. Isn't that the whole gist of our 17-page offer to purchase and contract? In exchange for your property, I promise to pay you X amount. That sales price is a credit to the seller. If I were you guys, if I may offer a tip, I just said let's see, I'm getting a question about the earnest money. Does the seller ever touch the earnest money? No, the earnest money's been hanging out in an escrow account since we went under contract. The seller never touches the earnest money. The seller only touches the due diligence fee. If I may make a suggestion, when you guys are studying pages 587 and 588, you may want to focus more on the seller's debits and know that the other debits belong to the buyer. There's fewer debits to remember here. So if you focus on the seller's debits, then you know all the other debits belong to the buyer. The buyer's got a big laundry list of debits, don't they? Because they're the ones buying this home. So what are the buyer's debits? Well, 17-page offer to pull contract says, in exchange for your property, I promise to pay you the sales price. The sales price will be a double debit entry. It's going to be a credit to the seller, a debit from the buyer. Other debits to the buyer, all costs relating to the buyer's due diligence. What are the costs related to the buyer's due diligence? Home inspection, pest inspection, survey, radon. What else? All those costs, unless you're told otherwise. These are going to be responsibility of the buyer, debit at settlement. Any lender fees, all lender fees are a debit to the buyer. Who's the relationship with? The lender and the buyer. The lender and the seller don't have a relationship. So the loan origination fee is going to be a debit to the buyer. The discount points will be a debit to the buyer. If there's an application fee, it's going to be a debit to the buyer. We're going to talk about something in a second called interim interest. That is associated with the buyer's loan. So anything having to do with a loan is going to be a debit to the buyer. We've been saying that the buyer hires the attorney. If the buyer's hiring the attorney, who gets to pay the attorney? The buyer. So the attorney's fees will be a debit to the buyer. The buyer pays to have their brand new deed recorded. The buyer also pays to have the lender's deed of trust recorded. The lender allows the buyer to pay for that at settlement. I want you guys to look with me on page 588 because I want you to make a note in your book. Under the sellers, you have a deed preparation fee. Under the buyer, you have a deed recording fee. Do we see that? The seller pays to have the deed prepared. The buyer pays to have the deed recorded. I always remember it this way. When the attorney is getting the deed ready for closing, whose deed is it? It's still the seller's. That deed has not changed hands yet. So the seller's going to pay to have it prepared. Whose best interest is it to get their brand new deed on record? The buyer. So they'll pay to have that recorded. And like I said, they also get to pay to have the lender's deed of trust. It's another lender fee. And then the last big thing here is the buyer's going to pay for title insurance. This is just a one-time fee charged at settlement. And they will charge the buyer for their title insurance policy that will start when their new deed is recorded. So we're going to pay the fee at settlement, and the title insurance policy begins once it becomes yours, once that deed has been recorded. There's also some items that are typically POC, which means they've been paid before closing. The appraiser is one party that requires payment before they do their thing. They're not going to let the buyer pay at settlement. So this is one thing that the buyer is going to have to pull money out of pocket for the contract to closing process, is to pay the appraiser. The appraiser will not go out and do their thing until they've been paid. Another POC is going to be the credit report fee. The lender's got to pull the buyer's credit when they first talk, they got to pull the buyer's credit. And again, they're not going to do it for free. So we're going to pay these things ahead of closing. So meaning that they're POC for our purposes, you guys, for this mini CD that we're doing, we're going to call these distractors. Don't put these on your mini CDs, because if you do, you've charged your buyer for the appraisal twice. You've charged your buyer for the credit report fee twice. So they're paid POC, paid outside of closing. Things may say paid before closing or prior to closing. If it's already been paid, don't charge your buyer again at settlement. The buyer's credit list is a lot shorter than the seller's. Credits for the buyer. On the day of settlement, the buyer's loan amount is a credit to the buyer. The buyer can't buy the home without the lender bringing the loan in on their behalf. On the day of settlement, the loan amount is a credit to the buyer. The lender is letting the buyer use their money to buy this home. As a thank you for bringing me the loan amount on the day of settlement, I will spend the next 30 years of my life paying you back. But with the settlement statement, we're talking about what's going on today. And today, on the day of settlement, the loan amount is a credit to the buyer. Other credits to the buyer, due diligence fee. Again, the buyer back up to contract formation. Buyer paid the seller, buyer handed the seller a check. And now we need to reverse what we've done by crediting the buyer. And then we also have the earnest money. And as somebody asked a few minutes ago, why isn't the seller debited the earnest money? Because the seller never touches the earnest money. The earnest money's been hanging out in an impartial third-party escrow account. The seller never touches it. And remember when we went under contract too, and we told our buyers the due diligence fee and the earnest money will be credited back to you at closing? We told them we were going to do that. So now we're here. Let's make sure we're going to do it. 587 and 588, as we're so close to doing this problem together. But as we do this together, as you guys do practice problems, I want you to use 587 and 588 as you're getting used to these. Knowing what's a debit to whom and a credit to whom is going to save you lots of time. And the only way you can know is if you practice, if you study 587 and 588, it could save you some very, very precious test time. Help you get through this problem a lot quicker. Questions? One last little piece to talk about is something I got to go off book, but one last little piece to talk about is something called interim interest. Interim interest is something that the lender charges the buyer. So interim interest will be a debit to the buyer. And what interim interest is, it's getting the buyer caught up on their interest payment. So let's talk about what I'm talking about. We have said that interest is paid in arrears. What does that mean? Where's your arrear? Behind you. I got you guys at the state exam, counting on your fingers, looking at your butts. I don't care, whatever it takes, right? Interest is paid in arrears. So when you made your mortgage payment yesterday on May 1st, what you were paying is April's interest. When you make your payment on June 1st, you're paying May's interest. Interest is paid in arrears. Don't have everybody so far. So let's say we go to closing. I'm switching my dates up just a little bit here for simplicity. So we go to closing. I'll pick a date in a second, and then I'm going to say it like this, and then I'm going to say it like this. All right, let's fast forward in time just a bit, and let's go to closing on May 21st. Anytime, this is closing, anytime whenever the buyer originates a new loan, you originate the new loan on the day of closing. So your loan is originated. It starts on May 21st. Whenever a new loan is originated, there is not a payment due the first of the next month. There is not a payment due on June 1st. The buyer's first payment due is going to be on July 1st. Whenever we originate a new loan, we always skip the first. So you originate this loan on May 21st. We're skipping the first, which means you don't have a mortgage payment on June 1st. Your very first payment is on July 1st. Why? Because interest is paid in arrears. And you remember, our monthly debt service doesn't change. It's the same for the life of the loan, which is a full month. So if your buyer has to make a mortgage payment on June 1st, they are paying all of May's interest. Is that fair? Considering you didn't buy the house, you didn't start the loan until the 21st. So why do we skip the first? Because I got to have a full month, because that monthly payment is the same for the life of the loan. So no payment on June 1st. That first payment's on July 1st. When you make that payment, you're paying June's interest. Put yourself in the lender's shoes. Don't you want interest from when you originated the loan and the rest of May? You want to start, if I'm bringing you a loan amount today, when do I want to start collecting interest? Today. So interim interest is always, did you guys hear my absolute word? Interim interest is always from the day of closing to the last day of that month. This is the borrower getting caught up on their interest payment. They owe this money, debit to the buyer for interim interest. And in this case, it would be 21, 22, 23, 24, 25, 26, 27, 28, 29, and 30. The buyer owes their lender for 10 days to get them caught up on their interest payments. They have paid through the end of May, no payment on June 1st. That full debt service payment, that full monthly payment for the life of the loan will begin on July 1st. Questions so far before we figure out the amount? May I say something while you guys are thinking? Some of you might be wondering why I'm using the day of closing. Because I'm not prorating. The seller has nothing to do with the buyer's loan. The buyer's going to be responsible for their interest on the day of closing. Do you think the lender wants to collect today? Heck yeah. Heck yeah. I'm not prorating, so the seller's not responsible. The buyer's going to be responsible for their own charges, their own debits. Okay, questions before we figure out how much? The first thing we need to do to figure out how much is figure out annual interest. And hopefully this is a review from Unit 14. If you take the balance times the interest rate, that gives us annual interest. You've seen this before. Balance times the interest rate gives us annual interest. I need to take this annual interest and break it down into daily. So once we have annual interest, we divide it by 360. In these examples, or 365 if the problem tells you. To get daily interest, I take that daily interest times 10, and that tells us how much the lender will charge, how much the lender will debit the buyer at settlement for interim interest. The problem we're getting ready to work together will have us work an interim interest problem out. So we'll see this again. Do you have questions on interim interest? Because I got May 21st, 22nd, 23rd, 24th, 25th, 26th, 27, 28, 29, and 30. I'm counting forward on the timeline. Every time you count forward. If you look at that number and saw 9, you just got the whole dang problem wrong. Count it out. I know some of you, I'm not going to count on my fingers, Julie. Are you kidding me? All right. I'm just trying to help. But seriously, why are you making it harder than what it needs to be? Real quick. Count it out. Questions? All right. I'm going to wrap up so we can go off PowerPoint for the rest of the class. So let me just say the rest of what I have to say, and then we'll have that problem. Let's bring this home. What's all this mean to us? We're just introducing you guys to this mini settlement statement. Like I said, we get to do a full-blown one in 302, post-licensing, the contracts to closing one. So what this means for us right now, we need an understanding. We're introducing you to this understanding of the settlement statements so we can sit down and review these things to help make sure what our clients are getting or have to pay at settlement is accurate. Your first couple settlement statements that you're reviewing for your clients, I encourage you to sit down with your BIC. I encourage you to have your BIC help you know what to look for. And understand this too, you guys, they're all different. Every single transaction is different. So getting that basic understanding, getting that basic knowledge, which is where we are right now, is going to help prepare you for all the different ones you're going to see once you're licensed. We do need to be able to verify the entries, the numbers that I reasonably should know. I also need to look out for red flags. So again, if the lender is charging the buyer 16 discount points, my little red flag just went up. Maybe they agreed to do 16 discount points. I don't know. But my little red flag went up because 16 is a lot of discount points. And as you guys get into these things, you're going to learn what is typical. You know, most loan origination fees are like 1.5%, maybe 2%. If you see a loan origination fee that's 6%, little red flag needs to go up. I'm not saying it's wrong. I'm just saying that we need to ask, are you sure 6% is right? As we said, what can we verify? How do we know what we are responsible for? Well, we can make sure, we may not know the actual numbers are right, but we can make sure that the debits and credits are properly charged, properly assigned. The first place I know to go when I get a CD to review it, the very first thing I do is pull out the sales contract and make sure that the numbers in the contract match the CD. I don't know about you guys, but you know, we went under contract 5-6 weeks ago. I don't remember those numbers. That was a long time ago for my little brain, you know? So pull the contract out, look at it, make sure those numbers match up. We're working on you guys being able to prorate, make sure prorations are correct, interim interest, excise tax. We talked about excise tax in Unit 5. And then just those bottom line figures. If nothing else, you can pick up your calculator and just straight line add. Also, as mentioned, buyer's agents, we will receive any unpaid invoices. Why is the home inspector sending me an unpaid invoice? So I can send it to the closing attorney to make sure that the closing attorney gets it on the settlement statement so that the buyer can pay the home inspector at settlement. You've received that unpaid invoice, you know that amount. If you didn't receive it, I can't verify it. But they will send it to you to make sure they get paid. And it might be when you're reviewing the CD, you go, holy crow, I forgot to submit the home inspector's invoice. Are you kidding me? It's okay. It's okay. We're all human, you guys. Call the paralegal and say, oh my gosh, I forgot to send you this invoice. I am so sorry. Clickety click, she will add it to the CD, or he, and it'll all be good. You've got to report it. You cannot hide your head in the sand and say, oh, well, we've got to report it. I don't know what to report if I'm not reviewing it, if I'm not verifying it. So what happens? I'm not going to review these things, Julie. I'm sure they're right. Well, you're going to be looking at disciplinary action for the real estate commission. Why? Because you've harmed their public. You didn't take that extra step to ensure that their final numbers were accurate. Like I said, I believe this is about the most important math that we do. This is old car math right here. That A in car, I have this duty. Questions? All right, while we're here, let me just go ahead and wrap up 21 so we can get off PowerPoint. So those key terms on page 541, your key point review on page 589. Your student quiz on 591. There are some mini CDs in your student quiz. There's also some in the online learning system that we'll look at in just a second. You guys may come across a practice problem that asks you how much the seller is going to get from closing. Maybe you want to do that, maybe you don't, but it's good practice. It gets us working with debits and credits. I'm telling you, both of your exams, don't say I never gave you test questions. You're going to see a test question that says, how much does the buyer have to bring to closing? As a reminder, we've already seen this. This is where in your book you can find what you need to know, or the settlement statement. Back to page 62, that's that unit 3, and it breaks down some proration scenarios with annual taxes. And then those 50 problems in the back of the book. There's a lot of numbers here, right? A lot of these back here are practicing proration, maybe standalone proration problem or standalone interim interest. But all good practice. These 50 problems in the back of the book, these are the numbers that relate to the math that we just did or will do. Y'all want to hear my little sob story? Poor me. When I got my license in 2008, we had to do a full-blown settlement statement. What we just saw in our book, those 2 pages, we had 4 questions. At some point along the line from when I got my license to when I started teaching is when I realized that they just reduced this to a mini CD and they moved the full-blown CD to post-licensing. I was mad. Like, are you kidding me? You guys, they're starting you out in small snippets now. They're starting you out with just focusing on the buyer. We will grow into the full-blown CD and post-licensing. I was like, that's not fair. All right, that's my sob story for the day. I know, poor us. Graduates of 08, right? I don't know when it switched over. Okay, we have these. Everybody have these jotted down? So where are we going? We are in the online learning system, and I'm under the Unit 21 material. And you can see under the Unit 21 material, we got closing mini number 1 with the answer key, mini CD number 2 with the answer key, 4 with the key, 5 with the key, and then some extra quizzes down here. So you guys have 4 mini CDs just right here in the online learning system, plus whatever you have in this quiz, plus what's in your book. Together in class, we are going to work mini CD number 1. All of these also have the answer key, so you can work them, you can practice and go back and look at your own. So we're getting ready to do mini CD 1 together. Where's mini CD 3? You might be asking yourself. Mini CD 3, of my opinion, is a lot more harder, a lot more difficult than what you're ever going to encounter on your exam. So I didn't want to put it in there to bog us down. If you're up for the challenge, just shoot me an email and I'll be happy to send you mini CD 3. But I want you to do 1, 2, 4, and 5 first. Everybody with me? I've never had anybody request mini CD 3, by the way, which is fine, but I'm just letting you know it's out there if you want. So we're in Unit 21 material. Let's see. The problem, I'm going to scroll down here. The problem, it's either going to be bullet points or one long run-on sentence. This is also multiple choice, so we have our options down here. When you guys are doing these, I want you to start at the top and work your way through. So I want you to start at the beginning of the problem and just work your way through point by point or line by line, paragraph by paragraph. And when we're doing these, the first thing I want you to do when you get to that question, the very last thing you're going to do is this question. And what I want you to do is take your blank scratch paper and I want you to draw a line right down the middle of it. These questions are going to ask us about the buyer. So all I care about is the buyer's credits and the buyer's debits. And what we're going to do is we're going to go through this mini CD and we're going to identify what's a credit to the buyer and what's a debit to the buyer. Go ahead and set your chats to private. Go ahead and turn to pages 587 and 588. We're going to go through these and I'm going to ask you guys, is this a debit to the buyer or credit to the buyer? I want you to refer to your book because you just met this. Use your book to help you and then start weaning off of your book. So use your book to help you at first. This is how we learn. So I'm going to ask you guys, is this a debit to the buyer or is this a credit to the buyer? And y'all are going to tell me in a private chat, C or D. We don't have to take time for you to type it out. Just tell me C or D and I know what you speak of. Do I have any questions before we get started? I know I preach about reading the problem first, but these are so long. So you guys good if we just dive right in? We'll go through it word for word, I promise. Okay. So the buyers have entered into so I'm not going to get it all. We'll get it close. The buyers entered into a purchase contract with the sellers to buy the seller's home for $210,750. Private chat. Is this a debit or a credit to the buyer? D or C to the buyer, the sales price. For the buyer. On the day of settlement, the sales price is a debit to the buyer. They owe that seller that amount in exchange for the property. So the buyer's debit of $210,750 for the sales price. By the way, I like to label my work. So if I ever have to go back, I know what that number means. I'm trying to save you some precious test time here. So I like to label my work. What is that $210,750? That is the sales price. That is the purchase price. The purchase contract provides for a November 24th settlement. Isn't that funny? We'd already went to closing on November 24th today. I did not think about that. I like to write the closing date somewhere on my paper because I know I'm going to have to refer back to it. And again, this could save us some precious test time because we know this is an important date. We know this is a date that we care about. The seller has paid taxes prior to closing, will be prorated at settlement. We're told to use the 360-day method and the amount is $2,610. So I just saw the word prorate, and I don't know what it is on prorating. I don't know anything else just yet, but you know what I do know? I do know that a picture helps. I know that a visual helps. I know what I'm prorating is this year's taxes. I know what divides the year, what separates the year is the day of closing, which is November 24th. I also know that the seller's responsibility is the front part of the year. I know that the buyer's responsibility is the latter part of the year. And I know that the tax amount, the number I got to prorate, is $2,610. I haven't even touched a calculator yet, but I've set myself up. I've prepared myself to help me better understand how to prorate. Don't pick up your calculator, and I can see your mouths move. Who has the bigger responsibility in taxes this year? Who's going to owe the most? The seller, right? That's what the picture allows me to see. That's what things that the picture allows me to see. So we know that the seller has paid the taxes. The tax bill for the year has been paid. The whole year has been paid. So now the question is, and please tell me in a private chat, who owes who? And you can abbreviate buyer and seller. Who owes who? Taxes have been paid for the year. Who owes who? Look at you guys. So who owes who? Taxes have been paid for the whole year, which means the buyer owes the seller for their portion. And on the settlement statement is going to shake out as a debit to the buyer. Let's put this down. I don't have a good place. A debit to the buyer and a credit to the seller. The buyer owes the seller for their portion of the taxes. Stop. Questions so far. We got to make sure we appropriate the right place. Debit the buyer, credit the seller. Questions so far just on that? Now we got to figure out how much. When does the buyer's responsibility start? Does the buyer's responsibility start today? No. Why? Who's paying today? Unless you're told otherwise, who's paying today? The seller. Who owned the property when our alarm went off this morning? The seller. So the buyer's responsibility is going to start the day after settlement and go through the end of the year. You know what? Let's put this down. Well, I can't. How many days do we have? Let's count together. That'll be fun. 25, 26, 27, 28, 29, and 30. Did you just look at that and go 5 days? And you missed the whole problem. Remember I said earlier, you can't miss a problem by rounding alone? You may miss a problem if you don't count the days right. I can almost promise you that one of those answer choices is a daily tax amount off. Banking on you, counting wrong. Is that not the most frustrating, infuriating thing ever? Count it out, you guys. 6 days left in November, 30 days in December. Buyer owes the seller for 36 days. Annual taxes, it's 2610. We got to break it down into daily. You know what? Why don't you guys tell me how many taxes? Some of you already are. Look at you guys go. Why don't you guys tell me in a private chat how much the buyer owes the seller? What's the amount on the CD going to be? Debit the buyer, credit the seller. I have an annual tax bill of 2610. I need to break that down into daily. How many days are in this year? Problem tells us 360. So we take 2610, divide it by 360. I get $7.25. What I'm saying here is that every single day this year, taxes are $7.25. How much are taxes on February 15th? $7.25. How much are taxes today? $7.25. Buyer owes the seller for 36 days. So we're going to have an amount, debit the seller, credit the buyer for $261, debit the buyer for our prorated taxes. Questions? Draw it out when you prorate. Draw it out and then stop and ask yourself, who owes who? That's what we're doing with prorating. Somebody owes somebody some money. Questions? May I erase the proration math? I'll leave the buyer's debits and our credits. May I erase the proration math? Going once. Going twice. It's out of here. Trucking right along. We're now told debits and credits for the following items should be made to common practice. What is common practice? Pages 587 and 588. So I got an earnest money deposit of $4,500. Private chat, D or C to the buyer. Earnest money, D or C for the buyer. Debit or credit? Congratulations, Mr. and Mrs. Buyer. You are under contract. You now owe me 2 checks, one for due diligence and one for earnest money. When you pay me now, both of these amounts will be credited back to you at settlement. So the earnest money deposit will be a credit to the buyer. Just thinking. We got financing next. There's a lot to say with financing. So before we jump into it, let's go ahead and take our last break. And then we come back, we'll finish this thing up. And then, of course, before we leave today, we'll talk about what next week's going to look like so we can look ahead and be prepared. So let's take 10. I am taking attendance. And let's keep trucking right along. So we've made it through earnest money deposit, credit the buyer, earnest money, $4,500. Do I have any questions up to this point? We've debited the purchase price, debited our proration of this year's taxes, what the buyer owes the sellers, and we've credited the buyer the earnest money. Financing. I got a loan amount of $175,000. Guys, it's really easy for us to accidentally forget about this. We got to do something with the loan amount. The buyer can't buy without this money. So please don't overlook the loan amount. Tell me in a private chat, D or C to the buyer, the loan amount. On the day of settlement, D or C to the buyer. On the day of settlement, the loan amount is a credit to the buyer. The lender, hear me, the lender is bringing the buyer the money on their behalf. The lender is saying, here is $175,000 for you to use to go buy this house. They're giving you that money that day. And you're going to spend the next 30 years paying them back. Everybody with me? The loan amount on the day of settlement today is going to be a credit to the buyer. And in this case of $175,000. And this is our loan amount. It is a conventional 30-year mortgage. I don't need to know anything about that. I got an interest rate of 7.5%. Hang on to that. We'll have to come back to that in just a second. I got a couple things going on here. I got a 1% loan origination fee. Remember, all lender charges are going to be debits to the buyer. So a loan origination fee is a lender charge that will be a debit. The loan origination fee is a percentage of the loan amount. What does the lender care about? Does the lender care about the purchase price? They really don't. All they care about is their money. So the origination fee is going to be a percentage, and the problem has to tell you, of the loan amount. So you got a loan amount. I'll put this here. Got a loan amount. The problem tells you we're going to charge you 1% of the loan origination fee. So in just a second, we're going to see a debit to the buyer for the loan origination fee of $1,750. Is that right? I try to go off calculator. Don't let me do that. Yeah. Loan amount, loan origination fee. I'm sorry, loan origination fee is a percentage of the loan amount. Again, please hear me. All lender charges. Which lender charges? All lender charges are going to be a debit to the buyer. All lender charges will be of the loan amount. Put that lender hat back on. So we did our loan origination fee. We also have 2 discount points to be paid by the buyer. That didn't work out for me. So 2 discount points. Can I put that back there? We'll just have to know 2 discount points. Discount points are also a percentage of the loan amount. And the number of discount points tells us the percentage of the loan amount. So 2 discount points is going to shake out to 2%. So I got my loan amount of $175,000. times 2% for my discount points, which means in addition to the loan origination fee, we're going to have $3,500 debit the buyer in discount points. Let me make this bigger for just a second so we can see the whole thing. So I had a 1% loan origination fee. We have 2 discount points right here, 2 discount points that shakes out to 2% of the loan amount to be paid by the buyer. Questions on this? Loan origination fee, discount points, debit the buyer. Then we have interim interest that tells us through November 30th on the borrower's new mortgage loan. Tell me in a private chat, if we're going to closing on November 24th, when will this buyer's first mortgage payment be due? We're going to closing on November 24th. When is their first mortgage payment due? Yep. Happy New Year. We go to closing on the 24th. We go to closing on the 24th. We skip the first, which means there is no mortgage payment due on December 1st. When will their first mortgage payment be due? January 1st. Debt service is the same every month for the life of the loan. I can only charge the buyer a debt service when I have a full month. And the month of closing, we don't have a full month. Remember, interest is paid when? In arrears. So no payment on December 1st. Your first payment is January 1st, which means the buyer's going to owe the lender for interim interest from the day of settlement, because I am not prorating, to the end of November. How many days? Let's do it together. I got November 24th, 25th, 26th, 27, 28, 29, and 30. So the buyer owes the lender for 7 days of interim interest. Questions so far? Figure out how much. We got our formula of the balance. On the day of settlement, the balance is the loan amount. On the day of settlement, isn't that what you owe the lender? You owe them $175,000. So the balance times the interest rate, which is where we have to go back up into the problem a little bit to find our interest rate of 7.5%. Balance times the interest rate gives me annual interest. So I got annual interest of $13,125. I want to take annual interest. I want to take annual interest and break it. Are you guys there? Something's going on with technology today. Give me 45 more minutes and I'll be good on technology. But okay, so we got 7 days. I got the balance times the interest rate gives me annual interest. Now we need to divide that annual interest by 360. can't even type today. 360 to give me daily interest of $36.46. So how much does the buyer owe the lender for interim interest each day? $36.46. We first found annual interest divided by 360 to get daily interest. Again, y'all, I can almost guarantee you, if we were to sit down with the calculator in a second, one of those answer choices is going to be off by $36.46, banking on you not counting those days right. So the importance of getting the number of days right. So I know interest is $36.46 a day. Buyer owes for 7 days. So we're looking at a debit to the buyer, what they owe their lender for interim interest of $255.22. This gets them caught up on their interest payment. Interim interest is always the day of settlement to the last day of that month. Questions? Can I erase the interim interest math? Moving right along. I got private mortgage insurance. The problem's already told me this is a conventional loan, but quite frankly, if it didn't, once I see there's PMI, I know it is, right? Because PMI can only be charged or will only be charged on conventional loans. So it's a conventional loan. And I'm assuming what this means is that the loan to value ratio is 80% or more. Thus, the lender is going to charge private mortgage insurance. Some lenders collect the first year up front, as this one is doing. Others may take that annual amount, divide by 12, and tack it onto your payment while you're paying that. This one's going to collect the first year up front, and they got to tell you how much. There is no standard across the board. So we're told we got 0.40% of the loan amount. What's the word of mean? Multiply. So we're going to take that loan amount. This is the lender charge, always of the loan amount. And we're going to multiply it by point. That point is so important. 40%. And I get private mortgage insurance for the first year of $700. It's a loan amount. All loan amounts are a debit to the buyer. I took the loan amount times what this lender's charging, 0.40%, and I got $700 for the first year to be paid at settlement. We got the buyer's homeowner's insurance premium. Annual premium is $442 to be paid at closing. The buyer is going to have to prepay for their insurance for the first year. Homeowner's insurance is like your auto insurance. When you pay today, you're covered for the future, right? So since homeowner's insurance is an annual, we got to charge the buyer today so they're covered. They have homeowner's insurance for their first year of ownership. When you make your car insurance payment today, you're covered for the next 6 months, right? When you pay your medical insurance today, you're covered for the period going forward. So homeowners insurance is no different. You got to pay today to be covered for the year. When your 1-year anniversary rolls around of homeownership, that's when the lender is going to pay that bill on your behalf to renew, because they've been collecting from you that 12th each month. But we got to pay that one day today. I got a due diligence fee of $250. Private chat, C or D to the buyer. Due diligence fee, C or D. Mr. and Mrs. Buyer, you pay this money at the time of contract formation, and that due diligence fee will be credited back to you at settlement. The earnest money and the due diligence are credits to the buyer. They've already paid that money once. We don't want to make them pay it again. So we're going to credit. Attorney's fee, $450. The buyer hires the attorney. So the buyer gets to pay the attorney's fee. Title insurance of $475. The buyer's going to pay for the title insurance policy at settlement that starts once that deed is recorded. Title insurance covers the current owner. You may see in your practice problems this title insurance premium broken up into 2 different charges, one for the buyer, one for the lender. So if we do, we're just going to add them together. They're both debits to the buyer. This one just gives us one. Buyer's going to pay for their title insurance policy. Deed preparation fee of $65. Tell me in a private chat what we are doing with the deed preparation fee. That's exactly what we're doing. We're washing it. It was a debited contract, and now we're crediting it at closing. What cancels out a debit? A credit. We're washing it. Private chat. What are we doing with the deed preparation fee? Ah. Some of y'all can't be gotten, can you? Who pays to have the deed prepared? The seller. What am I doing with it on this? Nothing. There's your distractor. Another distractor. Why do we need to know what the seller debits are? Because this is the kind of fun thing they like to do to you on your test. Good times, hey? I'm not going to do anything with the deed preparation fee because it is a debit to the seller. And who do we care about right now? The buyer. Again, I can almost guarantee you that one of these, actually I do know because we've done the math in these previous classes, one of these answer choices are $65 off. Banking on you not knowing what to do with that. So we're not going to do anything with the deed preparation fee. What am I going to do with the deed recording fee? Yep. Buyer's going to pay $15, debit the buyer to record the deed. Questions on this? There's a deed preparation fee. There's a deed recording fee. 587 and 588. I got a survey of $300. That's a due diligence cost. So the buyer is going to pay for the survey. And then there's usually, this says a courier fee of $25. There's usually, I call it the nickel and dime fee. There's some kind of, courier fee or wire transfer fee or, something like that. So each party is going to pay their own fee. So this buyer has a $25 courier fee. What questions do I have before we look at these loan escrows? All right, loan escrows. I got two things going on with taxes and insurance, possibly private mortgage insurance if the problem brings it up. This one doesn't have it, so we're not going to worry about it. Taxes and insurance. I got two things happening with taxes and insurance at closing. So let's talk first about taxes. The first thing that happened with taxes is we prorated this year's taxes. We took this year's tax bill and made it fair between the buyer and the seller. On the day of settlement, the lender is going to open an escrow account on behalf of the buyer, and they're going to start collecting a 12th of this year's taxes. So when that tax bill comes due at the end of next year, the lender has the money to pay that tax bill on behalf of the buyer. So we've already taken care of this year by prorating between the buyer and the seller. So with this loan escrow, we're looking at next year. The lender's going to charge an amount. In this case, it's going to be 4 months of real property taxes. They charge this amount at settlement to open the escrow account. We got to have an account on behalf of the buyer. But then they also want to collect a little bit for some cushion. So they have a little bit of extra money in the account in the event taxes go up next year. They want a little bit of money as a cushion so they can still pay taxes on behalf of the buyer. Is there a really good chance taxes are going up next year? Yeah, because that's what they like to do, right? The lender wants to make sure that they have this cushion. They have this money so they can still pay on behalf of the buyer next year. They got to tell you how many months they're collecting. This is no standard across the board. This lender is going to collect 6 months of taxes at settlement for the loan escrow account. And this is the second piece. Remember earlier when we were talking about the RESPA restrictions, and they have restrictions on escrow accounts. One of them is that they can only charge us a 12th of the annual taxes each year. Another one is how much they can collect at settlement, how many months they can collect. So RESPA regulates this. So I got 4 months. The lender wants to collect 4 months of real property taxes. If we go back up in the problem a little bit, I got to be reminded of what this year's tax bill is. The only thing I can base numbers on is what I know. I don't know next year's tax bill yet, right? All we know is this year's. So of this year's tax bill of $2,610, the lender is going to collect 4 months. So we're going to take our annual bill, divide it by 12 to get monthly. And then times it by the number of months that the problem tells you the lender wants to collect. This one wants to collect 4 months. I'm going to remove that question mark key from your keyboard. Be confident in your answer. So we took the annual tax bill, divided by 12, to get monthly taxes. And then we take those monthly taxes times the number of months, which we know is 4. I'm kind of running out of room here, but if you guys can bear with me, on your paper, you're going to continue working down. So under the courier fee, you're going to put $870 for escrow taxes. I'm really running out of room here. Here, can I just put that there? There we go. So under your debits, keep going on your debits. You got more room than I do. So keep going on your debits. Under the courier fee, we're going to put $870 for escrow taxes. Now, let me say this. The lender's not taking this $870. I mean, they are at settlement, but they're using your money with you. When you pay your loan off, or when you sell your home, anything you have in the escrow, you'll get back. It's your money. So they may deduct it off what you owe them. I know when I paid my condo off a couple years ago, I walked out to my mailbox 2 weeks after I paid it off, and I had a check in my mailbox from the lender. And I was like, that's pretty cool. Why are they sending me money? You know what they were sending me? What I had left in my escrow. So they're taking your money to use it on your behalf, but they're not taking it to use for themselves. If you have any money left in the escrow, when you go to pay that loan off or sell your home, you're going to get it back once they make sure you're all squared away. Then we got 2 months of homeowners insurance. Again, we got to go back up in the problem just a little bit to be reminded that homeowners insurance is $444. Again, 2 things going on with insurance at settlement. One, we have to pay for the first year's policy because insurance is always paid for coverage in advance in the future. So we're going to pay for this year's policy. And then we're also going to take a couple months for that cushion, that wiggle room. Is there a good chance homeowners insurance could be more than $444 next year? The lender wants that cushion so they can still pay that bill on your behalf. This lender wants to collect 2 months of this year's annual homeowners insurance bill. Tell me in a private chat how much we're going to debit the buyer for their escrow homeowners insurance. 2 months of homeowners insurance. Only 2 months. Not 2 years. So we start with an annual bill. What do we know homeowners insurance to be right now? All I know is $444. We're going to take that annual. We're going to break it down to monthly by dividing by 12. Each month, homeowners insurance is $37. Whoops. This lender wants to collect 2 months. So $37 times 2 is $74, which will be debit to the buyer, escrow, homeowners insurance. 2 things going on with taxes, 2 things going on with insurance. Gotcha. I was wondering, thank you. Questions on our loan escrows. Again, all regulated by RESPA. That's really all you guys need to know right now. What the lender can charge either monthly with the monthly mortgage payment or what they can charge the buyer up front at settlement is all regulated by RESPA. This is a lot of work, and you guys understand this is the first time you're going through it. This first time will be the longest time it ever takes you to go through it. Once you do it the second time, it'll be quicker. The third time, it'll be quicker. Once you spend time with pages 587 and 588, you guys have that written down yet? 587 and 588. I suggested the other day you take a picture of it on your phone so you can look at those anywhere you are whenever you get downtime. 587 and 588 is the key. It's the trick. Questions before we finish this thing out? We're close. Now, what I want you guys to do is add. I want you to add up all of the buyer's debits and all of the buyer's credits. This is why we do them side by side, because we've split them apart. We've separated. All we did was went through this whole problem and identified what's a credit to the buyer and what's a debit to the buyer. And now that we know this, we add up all of the debits and all of the credits. I'll give you guys just a minute. We'll talk about what we get. Thank you for that being private chat. You guys just a few more minutes to add up all debits, all credits, and then we'll talk about that last step. Not unless you want to go a step further. Make sure you're telling me A, B, C, or D in a private chat. All right, most of you have gone on, so let me catch up with you guys. When I add up all their debits, I get $219,869.22 or 21 cents. Again, we're not going to stress out about rounding. When I add up all the buyer's credits, I get 179,000 minus $179,750. The last step Debit minus credit. Debit minus credit tells us how much does your buyer have to bring to closing. I'm getting 40,119.22, which, because we can't miss by rounding alone, I'm able to look at my answer choices and say, how much does your buyer have to bring to closing? So you're reviewing this CD. You got the figures from the attorney. You're reviewing the CD, and you're calling your buyer and you're saying, I have reviewed your CD. I need you to go to the bank and get me a cashier's check or a wire transfer for $40,119.21. I'll see you tomorrow morning for the final walkthrough. And then we will go to the attorney's office together so you can buy your house. Super excited. What questions do I have? I know it's a little overwhelming on day one. I get it. You guys going to do another one on your own, and another one after that, and another one after that? I would almost start with the book before you go to the online learning system, because I think the books, they're smaller, they're less work, but it's going to get you in this flow. Does that make sense? Let me talk about the sellers real quick. For the listing agents, for the seller CD. For the sellers, their credits are going to be more than their debits. And so we're going to do a similar thing. We're going to, draw a line down the middle and have the seller's credits and the seller's debits from pages 587 to 588. And then for the seller, we're going to, so the seller's CD, we're going to do credit minus debit. If credits are bigger than debits, then this is going to tell us how much your seller's going to get. Credits are bigger than debits. It's going to tell us how much your sellers are going to get. Could the seller's debits be more than their credits? Yes. That's the seller that owes more than what you can sell their house for. If the seller's debits are more than their credits, that's how much they have to bring to settlement. Can your seller afford to bring money to settlement? I hope like heck you had this conversation back in the day when you were entering into the listing agreement with them. Remember, our listing agreement asked the seller for their approximate balances. And if we start seeing these balances add up, and we think we're getting more than the purchase price of $210,750, then we need to make sure back then that the seller knows that they may have to bring money to closing. And if you do, can you afford to sell your home? That's a hard conversation to have with sellers, especially those that you don't know. You're a total stranger to me, and you just met me, and I'm already looking at you going, what's your debt? What's your outstanding balances? How much you owe? It's uncomfortable. It's awkward. I'm not going to lie. But we got two choices. We have this hard conversation up front of the listing agreement, or we find out the day before settlement that the seller doesn't have any money to bring. What happens if they don't have the money? Game over. If they don't have the money, they can't pass clear marketable title. They are in breach. The seller could go after them. The buyer could go after them for the cost of the due diligence fee, earnest money. They could go after them for specific performance. You've not prepared your seller by not having this conversation up front. Thoughts? Comments? All of this is getting ready to go away. Everybody good? Can I erase? Gone once, gone twice. All right, let's see what we got here. So again, we're in the online learning system. The problem that we just worked together is the mini CD1. I got the mini CD1 answer key down here, so you can see the work that we just did, and you can see it just doesn't tell you how it got to $261. It works that out for you. So all of these mini CD problems in the online learning system have it worked out. It shows the calculations. Your book will give you the calculations, but again, the ones in your book aren't as complex, so they won't take you as long, which is why I suggest that you start there. Start with your book to get yourself warmed up, and then you can work your way towards these. The online learning system is more likely what you're going to see on your exam. You're not going to get these short little problems in your book. Does that make sense? So build up to this. And I do recommend with starting in your book. So there's mini CD 1, 2, 3, 4. There's some good practice here. Of course, this quiz, when you work your way through the end of the quiz, there might be some proration, interim interest, things like that. I don't remember if I mentioned it yet or not. Learning to prorate, learning to do interim interest could get you more than this one test question. So you might have like a standalone proration question where all it wants to know is how much does the buyer owe the seller for taxes? So when we take the time to learn how to prorate, it could get us a couple questions. It could get us the big one, but it could also get us in a standalone. Who's ready for some good news? We are through the majority of the math. Hang on. I got a little bit of math left. I did not just say we are totally done with math. We are through most of it. We are through the big chunk of it. I got a little bit of math in unit 17. I got a little bit of math in unit 12. But what I'm telling you guys is we've made it. We're through the most of it. Is that good news? Make sure you're going back and reviewing. If you forgot how to calculate annual taxes, what a great opportunity to go back to unit 3, relearn how to calculate annual taxes. In unit 21, you're going to take that amount and prorate it. The other thing I have to share with you guys, y'all want a present? Who wants a present? I tell you what, Sunday is my birthday, and I'm one of those people that just love their birthdays. So for my birthday, I'm going to give you guys a present. How does that work? That's the kind of birthday I like to have. In the online learning system, if we scroll down towards the bottom, I got a folder, I got a category called math. And within the math category is a math workbook. Now I'm going to show you this first page in a second. How'd you do that? The math workbook gives you the math calculations, what we talked about, and it breaks it down into further explanation and additional practice problems. So here's some additional tax calculations. This is what we talked about in unit 3. This is some additional tax calculations with some extra problems. How are taxes handled at closing? This is what we just talked about. So this math workbook gives you additional practice, additional explanation. That's not the present. Hang on. And you can see here, there's some more, here's area and volume. This is unit 4 math that we did. Again, another explanation with some additional practice. Excise tax, this is unit 5, and so on. You may come across some, like for example, there's commission, seller net's going to be in here, net to seller. Where's my example? Okay, profit and loss. We haven't talked about profit and loss yet. Skip it. We'll get to it. So you can't do everything in the math workbook yet. But like I said, we're through the majority of the math. So you can start solidifying that math. You can start working on it, get yourself those couple extra points. That's not the present. The present is page 1 of the math workbook. Oh, by the way, we also have the solutions in the online learning system. So all those practice problems, here's a solution worked out. Still not the present. Page 1 of the math workbook. Common question I get. What kind of math can I expect to see on your end of class exam? What kind of math can I expect to see on the state exam? That's your present. You guys, for example, don't need to worry about qualifying a buyer until you get to the state exam. Qualifying a buyer is not on mine. I would take a screenshot right now. I would use this second half of page 1 to help you know what math you need to focus on between now and May 21st. Do you need to worry about qualifying a buyer right now? No. When do you need to worry about qualifying a buyer? When you're getting ready for the state exam. Please remember, you guys, my job is to prepare you for the state exam, which means getting you through my test. So we're going to help you. What do you know what's on the state exam? That's what the syllabus is for. What do you know what's on my exam? I got another present for you guys. Questions on this math workbook solutions. Practice, practice, practice. Is that a good present? What's on the test? Ta-da. Another present. The next question is, okay, Julie, we get that the state exam is from the syllabus, but how do we know what's on your end of class exam? Has anybody seen this yet? Some of you are nodding, you know. Online learning system, under the Julie folder, there is a PowerPoint called End of Class Exam Review. What can you expect to see on my test? Ta-da! There are formulas in this, the math that you can expect to see. It's an overall good review. I want you guys to start looking at this, but remember, we still have units to get through. So I'm just introducing you to it so you can start solidifying this. And as you go through this, you see I'm not giving you answers. I'm giving you things to look up. Do not call me and ask me what a universal agent is. You know what I'm going to tell you? Look it up. I've already told you. Now I got to get you guys learning it on your own. Does that make sense? I can help clarify. I can help answer questions. With universal agent, classification of agency relationship, I'm done defining it for you. It's not helping you if I tell you again. It's going to help you if you look it up. Does that make sense? I'm not saying I'm not here to help, because I absolutely am. What's a material fact? I'm going to type back, Unit 7, smiley face, right? We got to get you guys weaned off. We got to get you guys learning this stuff. So you may want to consider starting to look at the exam review, end of class exam review, knowing that we still have other units to go. But it's the 2nd. Your test is on the 21st. We're what, less than 3 weeks away? So if you haven't started studying yet, this would be a great time to start. What questions do I have? Comments? Next week, we are going to, let's see, we are here. And boy, we are right on schedule, which I like so much. So we are here. So next week, we get to unit 17. After 17, we're going to blow through 13 pretty quickly. It's a short and sweet unit. After 13, we get into units 11 and 12. 11 is our landlord and tenant relationship, and 12 is our property manager. So we're going to put our sales hats down for a second and go into lease. So if you're looking ahead for next week, 17, 13, 11, and 12, that'll get you started. I don't want you guys to worry about time. I know sometimes we look at this and we think, oh my gosh, we're doing a lot of units at the very end. But seriously, y'all, there's not as many red stars. There's not as many level 3 questions in these last few units. So we're going to start moving through pretty quickly because of the weight of the test. We spent a lot of time in unit 7, right? We're not spending that much time in unit 19. So things may appear on paper to be moving pretty quickly, but we are right on point. Don't forget to, now that it's May, you guys have a cram course on the 17th. I will give you the link for Jane's Zoom. Lane will email that out to you guys on May 16th. And we'll talk more about that cram course when we get closer. But don't forget, that's coming up in 15 days. What do we think? It goes by fast, doesn't it? It always blows my mind. I really feel like I just met y'all yesterday. And now here we are talking about weeks away. It goes by fast. Keep your eye on the calendar. The 21st is approaching. You got the YouTube channel. You got all sorts of good stuff in the online learning system. How many of you are working through this? The online learning system, going along through it, the practice questions. I think it's one of the better resources that we have for you guys. So utilize that online learning system. Let me know if I can help. Let me know if there's anything I can do. But y'all have, has it been a year already? Y'all have a great weekend. Don't forget to do something fun. And we will see you guys on Tuesday. Thank you. Well, it's going to be online. So you can log in like you always do.